do business in a timely fashion with companies they've never studied before, and they know that speed is of the essence here. Now, that is, of course, the concern on the industry side. Treasury, for its part, has said it expects these banks to participate, and it expects loans to begin being originated beginning tomorrow. But then, Kelly, there is just the overload of the system, a back end that has never seen demand like this. American Enterprise Institute estimates $1 trillion of demand from small business exists for a program, first come, first served, that will only provide $350 billion. And one industry source says bank executives are worried this could look like the botched rollout of healthcare.gov in 2013.
Yeah,
Kelly?
I know, that's what we're all worried about. Kate, stay right there. We have some breaking news that's coming in on GE. Phil LeBeau joins us for that. Phil, what's going on?
Kelly just got off the phone with the folks at GE Aviation. They're going to be announcing a cut of up to 50% of the manufacturing staff. Remember, they're building the GE Aviation, the aircraft engines there in the Cincinnati area. Well, they're going to be cutting that staff down by 50%, a 4-week furlough that will begin on Monday. Obviously, this is because of what we're seeing with demand for aircraft and demand for engines right now. You've got Boeing essentially shut down in terms of manufacturing up in the Pacific Northwest, and you've got problems with Airbus and its manufacturing over in Europe. So now you've got GE Aviation, which previously announced, Kelly, that it was cutting 10% of the manufacturing staff. Now they're saying it's going to be 50% of those workers who will be furloughed for up to 4 weeks. Kelly, back to you.
All right, Phil, thanks very much. Kayla Tausche just told us the government is worried about avoiding a botched rollout of the small biz lending program. Kate Rogers is speaking with the small businesses themselves who have a lot of questions, Kate, about this.
That's right, Kelly. We've been hearing a lot of concerns from small businesses, and we're learning a bit more about what's been going on behind the scenes. SBA and Treasury did hold a call with trade group representatives yesterday, and here's what two sources on that call told me: that there are still many questions about program readiness, and trade group representatives were really questioning officials if they had confidence that banks would actually lend with 0.5% interest rates to these small business owners. The sources said that the officials did not say if they were confident or not, but rather they simply justified those low rates. It also seemed that officials were still working out how to handle independent contractors. One source said this is likely why contractors were punted to filing dates for next week, because it's unclear on how to handle them. An official familiar with the PPP program did tell CNBC that the official guidance for banks is not yet finalized, but said they are still aiming to launch this program tomorrow. Kelly, both sources from the trade group side that were on the call said that their biggest concerns were really getting enough clarity here for the banks to pull this off tomorrow. One source told me he has no confidence that this will actually be pulled off tomorrow because Treasury and SBA simply are not coordinated and are not on the same page, didn't have answers to simple questions yesterday. We did reach out to the SBA for comment on this, and we'll bring you anything we get it in real time.
Yeah, well, over to you. It doesn't sound promising if they didn't have answers to simple questions. You know, the question I keep getting, Kate, from people is, how do I get in touch with my bank? So they say, I call, but it just rings and rings. There's nobody there to answer. You know, a lucky few might have an email address, but a lot don't, or they might have had a contact in a year or two in the past, and they're not sure if that's relevant now. I mean, at a time when many banks are only accepting people in their branches, only a few of them are even open, only take them in if they have an appointment. But how do you, it's a real chicken and egg problem.
I mean, it absolutely is. We've heard from small business owners, you know, on the actual mom and pop side who are reaching out to their lenders, trying to figure this out in real time. We did tell you yesterday that there's a portal online at SBA.gov where you can search for lenders. But as Kayla was just saying, too, we were told this is a first come, first served program. So if you don't have a lender, that could be a huge problem for you. Even businesses that I've spoken to that are in touch with their lenders still have major questions about how this is all going to work tomorrow. So I think a lot of that remains to be seen. Of course, we're going to keep everyone informed as we go along.
Yeah, so real quickly, just make sure I understand. So if you go online, you can get the disaster loans, but those are different from the rest of the small business program. You still got to go through your bank for that?
Yes, that's right. You can apply directly with the SBA for those smaller disaster loans of up to $2 million. The $349 billion SBA 7A Paycheck Protection Program loan issuance that we keep talking about for tomorrow, that you have to go through a lender. Yeah. The SBA is a part of that program, but you have to go through the bank in order to get that funding.
Yep. Okay, Kate, again, great reporting. Thank you so much, Kate Rogers. Take a quick break. Coming up, raising $1 billion right now is easier if you're investing in healthcare. We'll tell you what VC firm Flagship plans to do with those funds that it just raised. We'll speak with the founder, who's also chair of Moderna, which, of course, has the lead vaccine for coronavirus right now. And we've all seen supermarkets with empty shelves as consumers stock up on essentials. We're going to speak to the head of one of the biggest supermarket chains about their supply chain and what customers should expect. A reminder, you can always watch or listen to us live on the go on the CNBC app. The exchange is back in 2.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen. Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
Take care of delivery, and it's yours free. Act quickly, and you'll also get this companion DVD for free.
Call 800-850-3232 or go to followthesmartmoney.com now. That's 800-850-3232 or followthesmartmoney.com. That's followthesmartmoney.com.
Welcome back. New York Governor Andrew Cuomo says it's the cruelest irony that the U.S. is dependent on China for production of personal protection equipment. We're going to have more on that story ahead in the show. First, let's get to Seema Modi, who has the latest headlines for us at this hour. Seema?
Hi, Kelly. That's right. The Democrats are postponing their presidential convention. Presumptive nominee Joe Biden has been saying he did not think a normal convention could be held in July due to the pandemic. It will now take place during the week of August 17th and will remain in Milwaukee. New York Governor Andrew Cuomo says the apex of the pandemic could occur in the next 7 to 30 days. He is also reporting another sharp increase in coronavirus deaths.
Number of deaths up to 2373, up from 1941. Looking for a trend line. The trend line is still basically up. Total new hospitalizations. Trend line of ICU admissions is still up.
It's the latest from Governor Cuomo. As always, for more coronavirus coverage, head to CNBC.com. For now, Kelly, back to you.
Seema, thank you, Seema Modi. Now, while a lot of VC funding is drying up amid this crisis, one area that's an exception is biotech. Let's bring in Meg Terrell for more right now with a very special guest today. Meg?
Hi, Kelly. Well, two different funds, major marquee biotech venture capital firms, announcing fundraising of more than $1 billion each today. They're Flagship Pioneering and Arch Ventures. Now, Flagship Pioneering is saying it's going to use this money to continue to create new companies focused on health and sustainability within its Flagship Labs unit. It's going to focus on using AI and machine learning in new ways, and also an area it calls health security. Now, Arch Ventures has raised $1.46 billion for two different funds. They are early stage investors in lots of different biotech companies, and they also years ago helped early investment in Illumina, the gene sequencing giant. Now, neither of these companies is saying that these fundraising rounds are focused specifically on COVID-19, but both have been very involved with companies in this fight. Arch Ventures has backed Alnylam and Vir, a company that was founded specifically focused on viruses. And Flagship Pioneering founded Moderna, which is in the lead in vaccine development for COVID-19. So joining us now to discuss more is Nubar Afeyan, the CEO of Flagship Pioneering and the chairman of Moderna. Nubar, it's great to have you with us. Tell us about this fundraising round. Was it more difficult than usual given the market conditions, or did you find people really wanted to put money to work in this area?
Well, Meg, it's great to be here with you. The investors that support the kind of work we do are long-term in nature. They are endowments and pension funds and quite long-term players, and they've been with us for over 2 decades now. And so when we sought this additional capital to be able to start new companies and make a new generation of breakthroughs, we found a very strong interest in the very nature of life sciences and how they can impact health and agriculture.
Well, Moderna, of course, is one of your major companies getting a lot of attention now because it is the first to be in human clinical trials for a potential coronavirus vaccine. Tell us how you see that path forward going, when we could see something that can be used sort of more broadly outside of clinical trials.
Meg, as you know, Moderna is a company that's a little over 9 years old now, and the journey to this point in putting together this completely new approach to medicine, the new drug category based on messenger RNA, has given us a lot of experience that poises the company right now to go after the particular crisis that we're dealing with and try to develop a vaccine that can be tested thoroughly in the 3 stages of clinical trials. It's difficult to put a specific date on things just because it's a very dynamic situation. We've entered phase 1 trials, as been widely reported. We'll enter, hopefully, phase 2 trials. We expect that to happen in the spring, perhaps early summer. And success there will hopefully lead us to phase 3 trials. We are, as was announced earlier this week, with the help of BARDA and others, very much gearing up to be able to meet the demand that could be generated, particularly in phase 3 trials. We expect that if the situation continues or worsens, there will be needs for emergency use, in particular with healthcare, frontline healthcare workers. And we are doing everything within our power to be geared up for the battle, and we expect this to be a long-term battle. We don't believe this is something that will resolve all that quickly. We hope it does in the first wave, but then there's other ways that only vaccines will be able to address. So we're quite committed and focused on this, but I'll also say that we expect that many others will work in this area, and we hope that everybody succeeds because the worldwide demand for these types of interventions is far in excess of what any one player can deliver.
Absolutely. Well, you guys are moving incredibly quickly, but messenger RNA, as you just mentioned, it's a relatively new technology. We don't have any approved drugs or vaccines based on that technology. I remember you explaining it to me years ago when you guys sort of came up with this approach. But what are the limitations to that? What worries you about the development path ahead? What we don't know about this virus and our immune system response to it? What are the potential hurdles to overcome?
Well, Meg, I've been in the biotech space for 33 years, and the industry's been around for more than 45 years. And throughout that time, the thing that hasn't changed is that while we know a lot about the agents that we use to try to deliver value, therapeutic value, vaccine value, we know relatively little about the actual human physiology that we are entering into with our interventions. And therefore, the uncertainties come from exactly how the approach we're using or any other approach will actually have an effect in the human body, let alone many different humans that have variations within them. And that's why the clinical trials are the gold standard that everybody has to go through. It's easy to anecdotally report some signs of hope, but we have to be very, very disciplined. Many things worry us in the sense that there's unknowns, but as it goes, these are kind of known unknowns. We need to kind of focus on the adequate measurements, the controls, the appropriate size trials, and we are very made available today in real time, reporting on what's happening, and we can incorporate that into how we proceed.
Absolutely. Well, Nubar, thank you so much for joining us today. We'd love to keep the conversation going as this proceeds, and we really appreciate you being here.
Thank you, Meg.
Thank you. To you.
All right, Meg, our thanks to you. As always, Meg Terrell. And to hear more from Moderna, the company's CEO, along with executives from Merck, Regeneron, and more, will join CNBC for an interactive virtual event on the fight against coronavirus. This is taking place on May 12th, so mark your calendars. And to learn more and request an invitation, go to cnbcevents.com/healthyreturns. Coming up, Grounded, the president appears to be weighing whether or not it's time to shut down the skies. Can he, and what would it take? We'll get into that. And FEMA is making efforts to coordinate medical supplies from around the world in the wake of the virus. We're going to look at how they're getting supplies here and how they're being distributed. Stay with us.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under your new episode section. Happy listening.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving, soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
It's TuneIn Sports on this day, April 2nd, 2019. OKC guard Russell Westbrook becomes the second player in NBA history to have 20 points, 20 rebounds, and 20 assists in a game.
There it is, 20 rebounds. There it is. 20 game. First time since 1968. And Wilt Chamberlain.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
And save money. Whether you're a credit stud or a credit starter, at Credible.com, we help you find great rates from multiple lenders. In 3 minutes, get actual pre-qualified rates. Have the money you need as quickly as tomorrow and start living your life.
Visit Credible.com to see how much you could save.
Hey, guy, ED issues? We got this. Today's your day. Go to forhims.com/ED.
Strategy at the market's crucial moments.
Let's trade the close.
We're going inside the market zone to bring you uninterrupted coverage of the final minutes of trade.
Commercial-free coverage and closing bell. Sponsored by E-Trade. Now with commission-free trading.
Welcome back. Let's take a look at the markets right now. About 38 past the hour. We're losing steam into the afternoon here. Remember at the top of the hour, we were up more than 300 points. At the highs, we were up 534. Now we're up just 93. That's a 0.5% gain for the Dow with 0.3% gain for the NASDAQ. The S&P still about 2/3%. We may be seeing this move lower on the back of a Wall Street Journal reporter tweet going back to the oil story today, saying that Saudi officials say President Trump's talk of a 10 million barrel a day reduction on oil is an exaggeration right now, quote unquote. Oil didn't move that much on the news, though. The commodity there is still up. Well, it's up about 21%. So at the high today, we're up about 24-25%. So it has come off a little bit. Again, that might explain what's happening in the broader market. Homing in on the sectors, consumer discretionary and real estate have turned negative. You can see that there just fractionally. Energy still leading the way up 6.5%, but it was up 10% earlier. Utilities also in the green today by a little more than 1%. And within the Dow, in terms of your movers there, Chevron is still leading, Exxon as well, Caterpillar, Chevron still up 8% today. The laggards include Walgreens and once again, Boeing. Boeing is down nearly 6%. It's trading around $123 a share. Well, with social distancing firmly in place throughout the entire month of April now, people are continuing to stock up on food and supplies, and that's putting pressure on grocery chains across the country. Frank Holland joins us now with more and with the CEO of Stop & Shop. Frank?
Hey there, Kelly. You know, the Stop & Shop grocery chain is one of many around the country where the shelves, well, they look like this in recent weeks, completely cleared out as Americans stock up on sanitizer, toilet paper, and even staples like meat and bread. These images, they were posted by a Stop & Shop customer on social media, but we've all seen them, and we've all wondered if there is enough food to go around and what is causing stores to run out. We're going to get to that in a minute, but first, we want to share how Stop & Shop is giving back during the coronavirus outbreak. The grocery chain is giving 5,000 free and fresh meals to medical first responders at several hospitals in New York City and in Boston. And we're joined now by the president of Stop & Shop, Gordon Reid. So, Gordon, thank you for joining us, and tell us what led you to make these donations.
I think, obviously, the medical workers are at the sharp end of this outbreak. They're working incredibly hard, and we heard that they were having difficulty getting fresh food, and therefore we decided that we would step up and offer between 5,000 and 6,000 meals a day.
Gordon, you gave us a list of the top 5 items that have been the best sellers since this outbreak came out. No surprises here. Toilet paper, sanitizer, things like that. But when we go to the store, sometimes we can't find them. At the same time, we hear there's plenty of supplies. Don't stock up. Where's the weak link in our grocery supply chain? What's going on? Why do we go to the store and are not able to buy the things that we want to get?
I think what happened, I mean, we've been at this now for 5 weeks, and in the first 2 to 3 weeks, there was a lot of panic buying. People were stocking up on, as you say, toilet paper, sanitizer, etc. They were stocking up on canned goods and pastas. And really, the supply sort of outstripped demand drastically. And we're now in the process of catching up. There's plenty of product in the system. No one's going to go hungry. No one's going to sort of miss out. But we just have to get back to normal sort of purchasing levels.
Gordon, it's Kelly here back at studio. You guys were early to announce that you would have this early hour for seniors and other vulnerable people in the population to come shop. I wonder, though, if a lot more still needs to be done to change the grocery experience, because we've heard companies like Walmart might be considering one-way aisles. Certainly, I know when I've been to the grocery store, it's a little bit of mayhem. Everyone's trying to stay a little bit further apart, but we all know we're still not doing it perfectly. And I even wonder if, as a societal help, you guys could do something we've seen in other countries and check people's temperatures maybe coming in and out. I know it sounds a little crazy, but I don't know, maybe nothing's crazy these days.
Well, that's for sure. It's been a roller coaster ride for 5 weeks. But listen, every day we're sort of looking at new ideas and new ways of working. We're working with different states. So in the one-way system that you talk about, we've implemented that in Connecticut. We're sharing that with the other states, and we're talking with the Massachusetts senator at the moment, or the governor at the moment, and trying to sort of influence that these are good ways of working. So we've documented the processes and practices, and we're happy to sort of work with anyone to implement.
Gordon, let's talk about online delivery and delivery of groceries. I know since this outbreak started, you said that it's spiked by 25%. Do you expect that trend to continue? And will it be sustainable even after this crisis is over?
I think it will. I think when we come out the other side of this, which we will, we'll be in a different sort of world. I think people have really sort of wanted e-commerce. It's outstripped capacity, I think, in almost any retailer, including Amazon, including Instacart. And people will sort of want this service. You know, I think, as I say, we're coming out the other side in a different place, and this will accelerate the uptake of e-commerce.
All right, Gordon Reid, the president of Stop & Shop Supermarkets, thank you very much and great work donating those 5,000 meals a day to medical first responders in New York City and Boston.
Yeah, and how about just keeping the stores open? That's where my parents shop. Frank, thanks so much. And Gordon, my thanks as well. That's why I'm like, check temperatures, keep them safe. Tune in for a CNBC special report, Path Forward. Tonight at 7 p.m. Eastern, you can catch the Prophet's Marcus Lemonis, Shark Tank's Kevin O'Leary, and Facebook COO Sheryl Sandberg on what her company is doing to help. You don't want to miss miss it. Again, that's tonight, live at 7 p.m. Eastern Time. Now, as the president considers a domestic flight ban, travelers are already staying home. How about this? Yesterday, just 136,000 people went through TSA screening. That's compared with over 2.1 million during the same day last year. So we'll talk about what's behind the administration's thinking and if it will come to pass after the break. Plus, a look at the shares of the airlines today. They're back in the red. United down 5%. Similar decline for American. The others just a little bit outperforming, so to speak. We're back into it.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under your new episode section. Happy listening.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
For many of our members, being prepared won't be a new thing. And it won't be their first experience with social distancing. Overcoming challenges is what defines the military community. USAA has been standing with them for nearly 100 years, and we'll be here to serve you for 100 more.
Welcome back. Let's get to some of the big calls of the day. Morgan Stanley upgrading Bristol Myers to overweight while cutting its price target by $4 to $64. They're saying that pre-COVID-19, they believed the BMY pipeline was debatable and the valuation was too high, but now the pullback represents an opportunity. They say Bristol Myers has relatively good earnings visibility during this pandemic, and they see positive pipeline readouts. BMY shares are fractionally higher at 54 and change today. Up next, D.R. Horton upgraded to a buy at Goldman with a $45 price target. They believe the industry, the home building industry that is positioned to weather a downturn with low supply and healthier capital. They say D.R. Horton can outperform in a weaker environment because of its below average leverage and a disciplined approach to cost, receiving a ton of focus on balance sheet these days. D.R. Horton down 1.5% to 32 today. And finally, Guggenheim upgrading Fox to a buy, saying they're best positioned among peers in a weaker but ultimately stable consumer environment. Their national news ratings remain strong. The company has a strong liquidity position as well. And in the live sports world, Fox is better positioned because they have late season content. So the hope is we're still maybe going to be up and running by then. Fox A shares down about 0.5% to 22 today. Well, the president says he's considering grounding some domestic flights between coronavirus hotspots.
I am looking at hotspots. I am looking where flights are going into hotspots. Some of those flights I didn't like from the beginning. But closing up every single flight on every single airline, that's a very, very, very rough decision. But we are thinking about hotspots.
So the president says he doesn't want to close the skies altogether. Could that actually happen? Is it allowable, so to speak? Let's bring in Phil LeBeau. And Phil, we've heard Lindsey Graham similarly upset that you could take these flights from New York to Florida back, and you're saying, why aren't we putting a stop to this?
Well, to answer your question about whether or not it's allowable, look, if the president decides he wants to ground all domestic travel, he can do that, although it would be problematic. And you talk with people in the industry. And by the way, when I talk with people at the DOT and FAA, they get no indication that that is what the Trump administration is thinking about doing. Now, when you look at the airlines right now, their perspective on this is, look, we're already cutting a lot of our schedule to begin with. They're filling just 5 to 15% of the seats on their flights. And when you look at passenger levels, you talked about this before the break, Kelly, 136,000 people. And by the way, that includes pilots and flight attendants and others who were screened by the TSA. That's how many were screened yesterday, down 96% compared to the same day last year. So clearly, people have already decided they're not going to be taking flights. And the airlines, they have parked a number of aircraft. Look at their domestic schedules in terms of how much they've cut so far. We're talking about American, United, and Southwest. American's cut 70% of its domestic schedule. More than half at United, Southwest, 40%. So the bottom line is this. When you take a look at another airline, Southwest, we mentioned that they're cutting 40% of their schedule. They're also out today saying that they're going to be taking out another credit line. They want to have the liquidity in place. The airlines believe that if you try to shut down all of the system, it's so problematic, Kelly, that most believe it would not be a wise thing to do. More likely is that the Trump administration says to the CDC, issue a strong travel warning, as they have with New York, saying unless it's absolutely necessary, don't fly here. And really what we're getting down to right now, Kelly, increasingly, it's medical staff. Somebody has to travel for a medical emergency. There's nobody, very few people, almost nobody who is going out and making a trip because they want to a certain destination.
Do governors have any more authority, ability, desire to do something like that, Phil? And I also wonder, a lot of travelers from going back 4 or 6 weeks were surprised at how few screenings there were. A lot of times they just, you'd answer a questionnaire, maybe there was a temperature check, not even, but if there was, something more beefed up in terms of getting through the airport, maybe people didn't feel like they had to, make these blanket moves.
In answer to your question, typically, states and municipalities, they own airports. So theoretically, they could make a decision, this is what's going to happen at this airport. If we decide we want to shut it down, we would make that decision. Having said that, every airport in this country receives federal grant money from the FAA and the DOT. And that grant money comes with the requirement that they have to work in consultation with the DOT. Bottom line is, if some mayor decided they wanted to shut down the local airport, it would likely wind up in court, and the decision ultimately would be handled on a federal level or whatever the court says.
Yeah, you can imagine it's the last thing anybody wants. Are they even having court right now? Are they going to do it remotely? Anyway, there's a lot of reasons why that wouldn't work. But, Phil, we appreciate it. Phil LeBeau with an explainer of what is happening with a lot of these airports and flights. Well, the president tweeting earlier today that massive amounts of medical supplies, even hospital and medical centers, are being delivered strictly to states and hospitals by the federal government. Now we're getting more details about exactly how they're getting these supplies. Speaking of flights, Elon Moy is here with that. Elon.
Well, Kelly, the president was referencing a new White House initiative called Project Airbridge, in which FEMA essentially charters planes to get private medical supplies from overseas to the U.S. faster. Some of the companies involved in this effort include FedEx and UPS, as well as medical manufacturers and distributors like Medline and McKesson. This month, FEMA is coordinating about 20 flights. This plane arrived in from Shanghai to Columbus, Ohio this morning. The latest information we have from FEMA is that it is entirely filled with gloves, 12.5 million pairs of medical gloves. About half of that will go to counties that FEMA and HHS have designated as high risk, and the other half will go into the private market. Now, states and local officials are concerned that there's not a lot of transparency in the distribution process. They're saying it's not clear exactly where this product will go and how those decisions are being made. So today, the chairman of the House Homeland Security Committee, Benny Thompson, he sent a letter to every single state governor trying to track down information about what they've received from the federal government so far and how much more they need. Kelly, he said he's asked for the same information from FEMA and from HHS, but he's not received an answer yet. Back over to you.
But it does seem, Elon, like there is this global scramble to get material, and that China was the first to do it and find materials wherever they could. Now it's the rest of the world kind of all at once. I can't imagine how difficult it must be to locate some of this stuff in such high demand.
Yeah, absolutely. I think one thing that's important to point out is that all of this cargo that you saw, that is separate from what is or is not in the strategic national stockpile. This is all product that is held by private companies. It's not being purchased by FEMA. FEMA's just trying to coordinate the delivery of these products. So you see what kind of piecemeal efforts states and locals are having to go through in order to get the supplies they need.
Got it. Absolutely. Elon, thanks so much. Are those records behind you?
They are. My husband's vinyl collection.
Wow. Impressive. All right, so you guys have plenty to do with your evenings. I'll leave it at that. Elon, it's good to see you. We appreciate it, Elon Moy. Stocks are losing steam this hour, but they are off the lows of the day after a Wall Street Journal reporter tweeted about the president's discussion this morning of this 10 million barrel cut in oil. The reporter said that claim was exaggerated. You can see the gains evaporating both for markets overall and for the crude price. Let's talk about this for another moment. Craig Callahan is founder and president of Icon Advisors. Craig, also good to see you in your native environment today. And you know, there's such a tight link between the price of oil and the markets. But what do you think is the most important kind of macro development these days in terms of, investors worried about whether we've really reached a bottom or not?
We do believe a bottom is forming, and it seems like all the bad news is priced in. There's no secret that, as you had a guest on earlier said, our economy is like a car that has just hit a tree. We all know that. It's no secret, and we believe it's built in. So it's just a matter of when people can see ahead to the rebound, whether it's next fall or next winter.
Would you be going company by company these days, avoiding kind of sector investing writ large?
Well, at Icon, we do take strong sector and industry tilts, and I was just reviewing my holdings this morning to see if there's any that I want to kick out and replace. So we expect a very different market coming out of here, different leadership, and I'm just trying to find what it is.
Well, I haven't heard you say that before, because a lot of times in the past, when we talked about the market, you'd say, look, you got to stick with the winners. And I think for you, a lot of times it was tech and industrials and consumer discretionary, maybe even the financials. Where are you looking to these days? What do you think might be changing?
It appears that there could favor small cap value, something we haven't seen for a long time. Smaller companies, mid-sized companies, out of industrials, materials. That's where I've been focusing most of my search.
Why small cap value, and why those sectors in particular?
Based on historic pricing of value versus growth and small versus large, it appears the sweet spot right now after this major shakeup are smaller, mid-cap, value-type companies.
So in other words, you don't know, but you're just following the market.
Correct. I'm going where value pulls me.
Right, exactly. All right, well, and that's the most honest answer here. We'll see if you're right about that. You're putting money to work aggressively yet, no, or just waiting?
Well, we're fully invested.
Okay. All right, Craig, it's good to see you. We appreciate it today. Craig Callahan is the founder and president of Icon Advisors. Still to come here, with nearly 10 million people jobless over the past 2 weeks, could there be a flood of early redemptions in 401ks? After all, people need to tap savings as a lifeline here. We're going to speak with the CEO of Empowerment. They manage accounts for over 40,000 organizations and nearly 10 million people. See what they can tell us about that trend. Our special breaking news coverage continues after this break. Dow's up 161. Stay with us.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving, soundtrack your every movement with the free TuneIn app, available on your phone or tablet. Download TuneIn from the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. Wait a second.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building.
For these and more, search sports and scroll down to the world of wrestling.
It's Tune In Sports on this day, April 2nd, 2019. OKC guard Russell Westbrook becomes the second player in NBA history to have 20 points, 20 rebounds, and 20 assists in a game.
There it is, 20 rebounds. There it is, 20 dead. First time since 1968. And Wilt Chamberlain.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
Emerson, consider it solved.
New York City's a travesty. The mayor waited way too long to impose the lockdown. Now we're all paying for it. So I think a nationwide shelter-in-place order would make a huge difference in the course of this pandemic. Watch or listen live on the CNBC app.
Welcome back. Our breaking news coverage of the global coronavirus pandemic and the markets continues this hour. I'm Kelly Evans. Tyler Matheson not here today. We're all going to miss his presence. Today's rally is losing steam. The Dow was up more than 500 points. It's hanging on to some of those gains. We're up just about 125 right now, coming off yesterday when the Dow dropped nearly 1,000 points to kick off the second quarter. Oil is higher this afternoon, but only by about 20%. The president claiming Russia and Saudi Arabia are close to making a deal on production cuts. That has sent energy stocks soaring, but there are conflicting reports that have cut into those gains. Crude is now only up about 18%. All of this as almost 10 million Americans file for jobless claims in the last 2 weeks. It's just a stunning number as the virus puts many businesses at a complete standstill. We're going to have more on all of it in a moment, but let's start with Bob Bassani on today's Snapback Rally. Bob?
And we are just off the highs. As you mentioned, there's a little bit of debate about how real this 10 million production cut call is for Saudi Arabia and Russia, as well as anybody else involved in oil production. So we're off of the highs. But energy has been the big mover here today. It's rather remarkable to me. I just want to point out Apache at $4. Apache was, a $60 stock a few years ago. And yet people are still buying it, hoping that $20 is a bottom. It always amazes me. Halliburton, Devon, Continental Resources, 10% moves aren't that much anymore when you're a $6 or $7 stock. So just everybody remember that. Meantime, restaurants, a week today, Brinker came out and suspended its guidance. So understandably, all the stocks in that space, the Red Robins, the Potbellies, Papa John's, Wendy's, Domino's, they're all down 5, 6, 7, or 8%. Want to also point out that the Reits are weak, partly for the same reason. Kimco, which is one of the big shopping mall REITs, they have a big position in Albertsons. They came out and essentially suspended guidance as well, and that's not helping their competitors out there that are Simon Property Group and the Regency Centers. And remember, banks, utilities, REITs, all down 6% yesterday. The one characteristic they have is that if there is some kind of rent holiday, the banks, the REITs, and the utilities are all going to be hit by that. And, of course, utilities not paying the bill is a big issue for them as well. So those are the three sectors that could be hit by any kind of rent holiday, whatever you want to call it, not paying the bills. And certainly, again, today, the shopping center REITs are bearing the brunt of that pain. Guys, back to you.
Yeah, there would be no celebration for the landlords, Bob. It's a good point. Thanks very much, Bob Bassani. As mentioned, the number of Americans filing for jobless claims skyrocketing over the past 2 weeks. Let's get to Steve Leisman for the details. Steve.
Yeah, Kelly, before I do that, I do want to give you some recent commentary by Federal Reserve officials. Neil Kashkari, the Minneapolis Fed president, saying we are almost certainly now in a recession, noting the claims numbers this morning and comparing it really to a hurricane, but a hurricane that's affecting the entire United States all at once, but saying he's unclear whether or not this is going to be a fast bounce back or something that perhaps takes longer. Robert Kaplan also saying that he has some questions about what happens to the consumer and how long this goes on, but he did seem to be sticking to his idea that there was a relatively fast bounce back. Questions, though, creeping in as to that, the speed of the recovery among Federal Reserve officials. Part of that is the unbelievable pace of the jobless claims rise. 6.6 million reported this morning. That is an unbelievable record versus 3.1 million estimated, almost double the number. So take a look at the past couple weeks, how many we've done. We went up 211 to 282. Seems so quaint now, 282,000 rise in claims to 3.2 million last week to 6.6 this week. So what I did is I modeled in conservatively what all that could possibly mean using a couple of assumptions for the unemployment rate, assuming no hiring out there and the vast majority of these claims go into unemployment, and you come up with right now, given these numbers, an 8.3% unemployment rate, but it could already be 10%, Kelly. It wouldn't be out of the order right now for that to be that high. These kind of claims are something that you expect to happen even more in coming weeks. Some of the states like New York were much lower than we think they're going to get. New Jersey as well. California may be on pace already, close to almost 900,000, but there's still a lot to come when it comes to these claims numbers, Kelly.
That's exactly, Steve, what people are asking, because they're saying, well, wait a minute, if some of the biggest population states are only now starting to shut things down, what kind of levels here could we reach?
Well, part of the problem is going to be the backlog in the ability of the states to process. Nothing like this. For example, that 6.6 million that filed or were reported to have filed in this past week is equal to the total number of continuing claims from the 2009 recession, or the peak of it. So they had many months. I think it took something like 20 months to get up to that high of a level. This happened in just a week. So there's two problems here. One is the backlog. Two is that more people are eligible, and I guess I said two, there's actually three. Three is that these state offices for unemployment are experiencing some of the same problems working that everybody is, so it's unclear if they can get everybody in. I have to imagine there's been something of a heroic effort to get these number of claims filed, and you keep hearing these stories. People can't get through, they can't get on the website, they can't get all this stuff. So I would expect these numbers to keep going up over time here until we reach, numbers that I've heard for the month of April, 20 million unemployed perhaps for the month of April.
Yeah, awful. All right, Steve, thanks. We appreciate it. Steve Leisman. Stocks have just turned negative there on the Dow a moment ago. We were up more than 500 at the highs. We're hanging on to literally a 7-point gain for the blue chips right now. Same kind of deal for the S&P and NASDAQ, just whipsawing around here. S&P's up still about 1/3 of 1%, but the NASDAQ and Russells are fractionally lower. David Rosenberg is on the line. He's the chief economist and strategist at Rosenberg Research and a CNBC contributor. Dave, are there any points you think people are missing about the nature of the layoffs and the shutting down of the economy right now? And I don't know what kind of letter-shaped rebound you think we might have at this point.
Well, look, we have no playbook for this. There's no real template that we can rely on in the past. I think that we have to build an assumption here that we could be in this isolation mode or the social distancing, through not just the balance of this quarter, but into July. I could see that the Canadian government, the Australian government, have made some comments along those lines. Look, I really believe that we will get through this, and we're in the eye of the storm right now. We're just entering into it, but I don't see that there's going to be a significant recovery even after we see this improvement in the case curve and we start to leave our homes and start to work again. I think that until we get the most important data point for me is when we get a vaccination. That's when things will get back to normal or quasi-normal. Before then, I think that we're going to get through the eye of the storm in the next few months on the economy. But the recovery until we get a vaccine, that's going to be the point in which time I think people are going to feel more comfortable spending the way that they were before the virus hit.
Yeah, we talked to the chair of Moderna last hour, which has one of the early vaccine candidates, and he emphasized that we're going to need all hands on deck, that we're going to need a lot of supplies, maybe a lot of different approaches. Theirs is RNA-based, others are a little bit different. So I wonder if we're really ever going to have that single headline or that clarity.
Well, it's going to be, piecemeal. I mean, even getting a treatment would be helpful to some extent. We're talking about, what is it that's going to make not just people go back to work. I mean, you're seeing that in China if you believe the numbers, but it's also clear to me that when you look at the sales data that people really aren't spending the way that they were before. And this is an economy here in the States where 70% of GDP is consumer spending. I just think there's going to be a prolonged period of caution. And then on top of that, someone's going to figure out who's going to pay for all the fiscal largesse, who's going to pay for everything that had to be done to get us through, because there is no such thing as a free lunch. You'd have to believe that the current generation of taxpayers, some of us are going to be paying for this. It's not just going to be future taxpayers. And that tells me that as we go into the future, maybe the most important behavioral aggregate we want to pay attention to is the personal savings rate. Because I think we come out of this, of course, we went into it at every level of society and business, and portfolio managers went in with almost no cash. Next thing you know, an economic crisis becomes a liquidity crisis. So I think, how businesses and households approach liquidity, how they approach cash, how they approach the balance sheets is going to be a lot different than it was before. That's even when we get past the eye of the storm. This is going to be something that holds back aggregate demand growth, which in other words is the economy, is going to be a new form of frugality, but a rising savings rate that's going to really cause this to be, I'm not calling it an L shape, but I think it's going to be just a long-term series. I'm talking about years of low case W's. That's what we're going to be seeing, bouncing along the bottom.
Yeah, I hope you're wrong, but you make a lot of good points. So when you talk as well about the tax load that the current generation may face, does that imply that happens only after interest rates start to rise? Because otherwise, could we just issue as much as we need to?
I guess that's actually a great answer. Will the answer ultimately be the Fed? Did we all of a sudden head into debt monetization, or we're talking about, in theory, the modern monetary theory, and here it becomes reality. At some point, if we go that route, and the Fed loses control semi-permanently of the monetary base, then you're going to find people who have been in the declining bond yield camp and the disinflation camp calling the other way. Like, basically, we come out of the other side of this mountain with a lot of inflation if this ends up on the Fed's balance sheet permanently. So, like I say, no such thing as a free lunch. It's either going to be higher taxation in the future, and that's going to cause the savings rate to go up. It's called accordion equivalence. Or if it's done on the Fed's balance sheet, we're going to come out of this with more inflation than anybody would have thought.
People aren't going to believe that, though. They'll say it doesn't matter how big the Fed's balance sheet is. It's not going to be inflationary.
Well, when we get past the worst of the recession, then and you're taking a look at what happens, say, between the money supply and velocity. And look, I've been in that camp for a long time. I was saying for many years that QE on its own was not going to precipitate a big inflationary cycle, and it didn't happen. But outright debt monetization, I will tell you that to say that this will not be inflationary down the road is to say that you're betting against history.
Okay.
And so I would highly advise against doing that.
There's
no such thing as a free lunch. People seem to think that we can just rely on the Fed's balance sheet, that it's infinite, and if that's the case, you could ask yourself the question, why haven't done this before? We could have avoided every recession in the past. Just use the Fed's balance sheet. There's going to be risks on this down the road, and the risk will be that in the next economic expansion, and once we say we absorb the savings glut that we have, there will be inflationary consequences. It's just going to be, what the time frame is for that.
David, like I said, it is always good to hear from you. Thanks, sir, for your time today.
You too. Take care.
David Rosenberg of Rosenberg Research. A lot to think about there. Last hour, we reported that GE Aviation is going to furlough 50% of its engine manufacturing staff. A graphic on our screen mischaracterized these actions as layoffs. So again, we said they were furloughs. All of the imagery should have said furloughs. That's what's happening with GE Aviation. And in fact, CEO Larry Culp will be on Mad Money this evening. I have a little bit more on what the company's position is these days. Coming up right here in the U.S., there are now more than 226,000 confirmed cases of the coronavirus. That's nearly double the number in both Italy and Spain. And healthcare workers on the front lines are facing big pay cuts. We'll have a special report on that. Plus, the virus closing the door for many stores around the country as retailers are forced to scale back and lay off their employees or furlough them. I will bring you those details next right here. Stay with us.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving, soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving, soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Rays Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
It's TuneIn Sports on this day, April 2nd, 2019. OKC guard Russell Westbrook becomes the second player in NBA history to have 20 points, 20 rebounds, and 20 assists in a game.
I heard it, 20 rebounds. There it is. 20 dead. First time since 1968. And Wilt Chamberlain.
To listen to conversations breaking down the moments just like this, search Sports to be part of the discussion on TuneIn.
Minutes get actual pre-qualified rates. Have the money you need as quickly as tomorrow and start living your life.
Visit Credible.com to see how much you could save.
For every staircase supporting a grand entrance, door frames marking milestones, floors kissed by bare feet, and walls making room for new memories. Protect the pure joy of home with Terminix. We're committed to keeping termites out of your home with our all-new On Guard termite protection system. Always backed by the Terminix promise to keep your home strong enough for all the love it holds.
Welcome back. Retail continues to get slammed by the coronavirus, with foot traffic basically falling to zero. Courtney Reagan is here with the next shoe to fall, the next round of layoffs that we're hearing about, Court.
Yeah, Kelly. So in these cases, we're talking about furloughs. And by my count, it's been about 60 brands so far that have announced them. And these numbers are going to keep rising. This amounts to about hundreds of thousands of employees. So some of the latest announcements are coming from Ross Stores, the company that runs Famous Footwear, Naturalizer, Alan Edmonds, and Sam Edelman, along with Express and Bassett Furniture. And these joined the previous furlough announcements by Macy's, Kohl's, JCPenney, Gap, and a number of others. Now, the good news is the majority of these employees that are furloughed are going to get to keep the health insurance if they previously had it with these employers. And in many cases, the employers or the retailers themselves are picking up that premium. They're also eligible because it's a furlough and not a layoff for the unemployment insurance under the relief bill. But it was only inevitable that these furloughs would happen because of all of the store closures. By my count, I've got about 220 large brands closing stores. That's more than 67,000 locations, and that's likely well undercounting what's actually closed because of the independent names and some of the other retailers that haven't made large announcements that are included in these numbers, frankly, that I've been tracking. And it's not just the store-level employees that are facing cuts, Kelly. Many salaried employees are seeing their salaries reduced. Many CEOs are taking no salaries during this period of time. And also 401k matching programs are either being frozen or suspended by retailers that include Macy's, Bassett Furniture, Chico's, Lazy Boy, and a number of others. Back over to you, Kelly.
That's exactly what we're going to pick up on. Courtney, thanks very much. Our next guest is the chief executive of the nation's second largest retirement services provider. His firm just announced that it's waiving fees on all 401k loans and hardship withdrawals because it's expecting to see a whole lot of them during this downturn. For more, let's welcome in Ed Murphy. He is president and CEO of Empower Retirement. Ed, it's good to have you here. And we just got some news from the IRS that I think is relevant, where they say that Americans can expect to get direct deposits for these stimulus relief checks, whatever you want to call them, quickly, but that if the IRS doesn't have your direct deposit information, they say it could take up to 20 weeks to issue paper checks. So 5 months, Ed, I'm sure means more people are going to have to look to their 401ks, right?
Well, first of all, Kelly, thank you for having me. And I think the short answer is yes. We serve 9.6 million American retirement investors. And thus far, I would say they've showed tremendous restraint with respect to making changes to their asset allocation. They've typically stayed the course. And what we found is only about 1% of our customers have actually made changes to their portfolio, which is just incredible given the market volatility. But to your point, I do believe, given the unemployment claims the last couple of weeks and given some of the actions that are being taken by the manufacturing retail and hospitality industries, that we are going to see higher demand for hardship loans, distributions from 401ks. It's obviously the last resort. We would prefer that they not exercise that option, but in some cases, people will need to.
I thought it was interesting already that at any given moment, about 20% of people might have a loan out against their 401k. I mean, that's much higher than I would have thought. And as if I understand it correctly, that was going into this crisis, right?
That's correct. But oftentimes, people will take out loans for short-term need, and then they pay themselves back. But they oftentimes, are tapping into that loan periodically over a period of time. But I do think the challenge right now is people are going to need to pay bills, and so providers like us and others are stand ready to help them, to support them. We're waiving the fees so they can get access to it as quickly as possible.
Let me ask you something. A lot of the bills we're talking about are the essential monthly expenses. They include rent, they include utilities. They might include a car payment. They might include student loans. On a number of those fronts, the government is trying to give people relief. Certainly on the mortgage front, certainly on the student loan front. We know landlords are trying to work as well with tenants. Would it be better off for people to try to get documentation and consider, not paying those bills, knowing that, hey, it's understood right now that's not going to happen, as opposed to tapping their 401k, something that could be harming them substantially in the future as well?
Absolutely. I think banks and landlords in general and other lending institutions are demonstrating a lot of flexibility and a willingness to work with individuals. And if you think about where we are today in the market, the S&P is down 26%. And ideally, what you'd want to see for those that are continue to be employed is to use that payroll deduction and the dollar cost average into this market. One of the things that we're finding very interesting is of the people that are making changes to their savings rates, 2/3 are increasing their savings rate and only 1/3 is decreasing. And I think a lot of it has to do with the belief that this is a long-term investment. It's long-term money. It's there for retirement. And so I want a dollar cost average into this market. Obviously, if you're unemployed or you're furloughed, you don't have that option. And so as I would suggest that the last option should be tapping into the 401k. And oftentimes people will talk to their advisors. We give people guidance over the phone. We take 25 to 40,000 phone calls a day.
Wow.
And it's typically not about people looking to change their investment. They're looking for reassurance. They're looking for market commentary and guidance as to what they should do.
Yeah, no, I understand. Certainly at a time like this, it can do a lot to make sure you don't make a decision that could harm yourself in the long run. Ed, thanks for joining us.
You bet. Thank you for having me.
Ed Murphy is the CEO of Empower Retirement. Still ahead with Chevron and Exxon leading the Dow right now as it wipes out its early gains. We're going to have more on President Trump's claims that Russia and Saudi Arabia have agreed to cut oil production. Plus, as millions of Americans are losing their jobs, many are unable to pay the rent as the real estate market comes under pressure. So who's left holding the bag? We're going to talk to Bess Friedman of Brown Harris Stevens about the fallout. We're back in 2.
It's Tune In Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now, it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
Well, there's no question the spotlight today will focus on Dominique. Given what happened last week, I would think there's some incentive for Dominique.
To listen to conversations breaking down the moments just like this, click on Sports to be part of the discussion on TuneIn.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under your new episode section. Happy listening.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. 20 seconds.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building. But I'm
For these and more, search sports and scroll down to the world of wrestling.
Born from discipline, consistency rewards. Columbia Threadneedle Investments.
It's Monday. We're live, and Ricochet's going airborne.
If I'm up here breaking the laws of physics, must be Monday. Must be Monday. Must be Monday Night Raw. Live Mondays at 8 on USA.
Welcome back. Let's get the very latest on the coronavirus. Seema Modi has that for us. Seema.
Hello, Kelly. Good afternoon. The global death toll from the pandemic has gone above 50,000. Spain has now suffered more than 10,000 deaths, and the U.S. toll has risen above 5,300. Global cases are nearing 1 million, with about a quarter of them in the U.S. A new survey finds doctors are very concerned they don't have the tools they need to fight the coronavirus outbreak. 73% say they cannot test patients quickly. More than three-quarters think their hospitals or clinics do not have adequate supplies. Now, to help address at least some of those shortfalls, the federal government is distributing tens of thousands of masks, gloves, and other personal protective equipment. The supplies were seized earlier this week by the FBI's Hoarding and Price Gouging Task Force. The gear is going to medical personnel in New York and New Jersey. Robert Kraft, the owner of the New England Patriots, has sent the team's plane to China to bring back respirator masks. He's giving 1.4 million masks to the state of Massachusetts and other 300,000 to New York. As always, for more coronavirus coverage, head over to CNBC.com. Kelly.
All right. Yep, it's a mad scramble for equipment. Seema, thanks. Hospitals are overwhelmed with the number of coronavirus patients, are postponing elective surgeries, and it's coming at a cost for some doctors. Stat News has a new article detailing the revenue problems facing hospitals across the country and how some are even having to cut doctor pay and benefits right now. Lev Fasher is a Washington correspondent with Stat News. Lev, it's good to see you. And why couldn't they hold off on these cuts?
Well, it's kind of the cruel irony of this pandemic that we're seeing physician groups, we're seeing hospitals have to cut back on what are seen as non-urgent, non-essential procedures. They're not performing cardiovascular surgeries, orthopedic surgeries, just billings across the healthcare sector are way down despite this immense demand for actual emergency treatment for people with COVID-19. So the revenue streams have essentially fallen off a cliff, and that has meant that physician groups and hospitals have had to essentially give frontline healthcare workers who are treating people with coronavirus a pay cut, or at least a benefit cut. So there are hospitals that have deferred salary payments. There are physician groups that have cut off 401k contributions and paid time off and discretionary bonuses. So even as some doctors work in emergency rooms treating people with coronavirus, they're seeing a cut to their compensation.
Yeah, no, it's not what you want. I mean, it's not what I think we want as the public. I'm sure it's not what the hospitals want. Is there more money coming from the federal government or somewhere? I know some was already allocated to help them through this period, but these cost cuts, layoffs, benefit reductions suggest it's not enough.
Well, I think there's a lag in the $100 billion that you're alluding to that Congress set aside for hospitals and other health systems to essentially keep them afloat through this pandemic, understanding that we can't afford to have hospital closures and health clinic closures as, you know, there is this immense urgent demand for people who want to get tested and for people who are in respiratory distress and actually need urgent treatment for coronavirus. But there's obviously been a lag, and it's impacted a lot of these health systems. And that's why you're seeing cuts to compensation. You're seeing in some places furloughs, workforce reduction plans. Some places are ceasing to use contract workers or hourly workers and relying instead solely on their salary workforce. So we'll see what happens in the coming weeks. Obviously, it doesn't seem like it's imminent that hospitals and other health systems are going to be able to resume those, lucrative but not necessarily urgent, meaning needed this week or tomorrow procedures that keep them afloat during more normal times.
One related question to that is how hospitals across the country are faring. So those that have seen what's happened in New York or maybe Washington State, were they able to better prepare to kind of either handle what could be an influx of coronavirus patients or just prepare for having to shut down these elective procedures and all of those sorts of things?
I don't know that state by state I could necessarily give you a trend of, who's been better prepared, who's been worse prepared. We're seeing across the country hospitals struggling just to keep folks supplied with masks and other personal protective equipment. Obviously, the ventilator question has been a huge one. We have seen the federal government really take very dramatic steps to scale up capacity in New York City and Los Angeles. You have these hospital ships that President Trump continues to talk about. We have field hospitals in New York City popping up. So, there does seem to be a lifeline for hospital capacity in some states, but we're also seeing anecdotal reports, of shortages of ventilators and, the personal protective equipment issue and, seeing the New England Patriots, their airplane landing back on American soil, transporting masks. That was really, I think, telling of the situation that a lot of hospitals are in.
Crisis or not, you can't call them the New York Patriots, Lev.
I'm from the West Coast, and the Oakland Raiders have moved away, so no more NFL for me.
They are the team favorite in my house. Long story. Lev, it's good to see you. We appreciate it very much.
Thanks for having me.
Lev Fasher of Stat News. Coronavirus fears have taken a huge toll on New York City real estate. We're going to explore just how bad it could get next. And as San Francisco is locked down, VCs, those who are backing startups, aren't immune to the layoffs plaguing businesses large and small. How Silicon Valley is dealing with the economic slowdown is also still ahead. Remember, you can always watch or listen to us live on the go on the CNBC app. We're right back with our special breaking news coverage. Stay with us.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under your new episode section. Happy listening.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know. It's TuneIn Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now, it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
But there's no question the spotlight today will focus on Dominique. Given what happened last week, I would think there's some incentive for Dominique
to listen to conversations breaking down the moments just like this. Click on Sports to be part of the discussion on TuneIn.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Rays Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
AM Eastern. Watch and listen live on the CNBC app.
Hi, I'm Hanno. I created Gabi because most people overpay on car insurance. Gabi is a free tool that saves you money by finding the best deal. Gabi users save more than $800 per year on average. Go to Gabi.com and stop overpaying for car insurance.
At Credible.com, we've helped tens of thousands of people save money by refinancing their student loans. In 3 minutes, we'll get you actual rates from multiple lenders. We could save you hundreds of dollars a month.
Visit Credible.com to see how much you could save.
When it's time to sell your home, there's a lot of money on the line. How can you trust your real estate agent will get it right? There's good news. With HomeLight, you can compare actual performance data on thousands of agents near you, so you know who sells quickly, who sells for the best price. We'll match you with the perfect agent for your needs. And best of all, it's free. Sell your home for more money. Go to HomeLight.com today.
Welcome back. The big gains we had earlier this morning have mostly evaporated as we've moved throughout the session. The Dow is now down about 37 points, 0.2%. It's below 21,000. The S&P 500 is down, still about 0.4% to 2480. But the Nasdaq and Russells are declining today. The Russells by about 1%. It was a big session for oil. That's what mostly moved stocks around. On the close, oil was up a little more than 23%. So it was just shy of its best day ever on hopes of a production cut after President Trump said he spoke with Saudi's MBS and Vladimir Putin. Let's get to Brian Sullivan. He joins us now with a look at, Brian, what the latest is. We saw crude go as low, quote unquote, as a gain of 17%. The Wall Street Journal tweeting somewhat of a rebuttal to the story as well.
Yeah, listen, the numbers are just hard to come up with. I think that I'm looking at a Citigroup note as we do this. They're saying basically, I think probably the algos got a hold of that tweet and spiked oil prices. I mean, you can cut oil 10 million barrels a day globally, Kelly, or even 15, but if demand is down 18 to 20 million barrels a day, you're still oversupplied in an already oversupplied world. And that's where it gets confusing, I think. Now, let's be clear. We've got a tweet from the head of the Texas Oil Commission. They're basically the rail commission, but they're the ones that control oil, despite the name rail. It's about a 100-year-old thing, long story. Anyway, they're saying, just had a great conversation with Russia's Alexander Novak. We normally compete, but we talked about a 10 million barrel global supply cut. So that's from Texas. But you've got to be clear with the language, Kelly. Global supply cut. Saudis have said they want a fair deal. Those are code words, at least in my experience, going to these OPEC meetings and traveling around the world. Everybody's got to participate. That includes the United States. We talked about this in the 1 o'clock hour. This is not the Saudis or Russians taking 10 million barrels a day off the market. This is OPEC maybe taking, 5 or 6, maybe, and the United States slowing it down. Can we do that? I don't know.
Right.
We'll see if Trump can convince the oil companies to do that tomorrow at the White House.
True.
In person.
True, right, because they're all headed there. So, we have seen crude now back up about 25% in the last little bit, Brian, after that tweet from Texas, which is pretty striking. I mean, you told us just a moment ago about the NOPEC bill not working its way, but that has been tabled in Congress. So, it's an odd thing to see the market applauding the idea that Texas is talking to Russia about a 10 million barrel a day global cut.
We're turning into OPEC, Kelly.
That's kind of where I'm going with this, yeah.
This is, we got to come up with either, they call it ROPEC with Russia, or people are calling it OPEC plus. And the United States is the second plus. Ironic that OPEC, as I've said before, was a 4-letter word for 40 years.
Right?
In the United States. Price cartel, price controls. Suddenly now we're like, hey, OPEC, can you help us out? This is what we talked about the last OPEC meeting, by the way, in December. Of course, we had no idea what was going to happen with all this stuff. But we're we're like, hey, OPEC, what's going on? The fact that the Russian energy minister and the head of the Texas Rail Commission are having conversations is all you need to know about the state of the world and global energy markets right now, Kelly Evans.
Isn't it, though? I think about people who remember those gas lines from the 70s when, it crippled the U.S. economy.
My dad owned a gas station.
Yeah.
I owned a gas station. I was 9 years old just working at this gas station. He didn't pay me, by the way. He still owes me money on that. And I remember you could only go if you had a certain license plate number. We're not going to get to that because they're going to give away gas, Kelly. You know what? You're getting for Christmas this year a barrel of oil, courtesy of me. You're welcome.
I know. And the producers will say thank you. Brian, thank you for bringing us up to date. We always appreciate it.
Sure.
Brian Sullivan. Let's move on to the real estate market, also feeling a hit from coronavirus. Across the board, it's pretty much brought the industry to a standstill as fears about the economy persist. Robert Frank is here with a look at how the New York market in particular is getting hit. Robert?
Hey, Kelly, love the glasses, by the way. Yeah, so the first quarter numbers for Manhattan, they're out today, but I really want to just focus on the last 2 weeks of March because that's really all that matters right now. In the last week of March, we had only 2 contracts above $4 million that traded. The last time we had that, back in 2009. Now, one of those contracts traded for 40% below the asking price. But the big headline today, what really matters, is the inventory. New listings, they were down 85% from the same period a year ago. And the number of listings that were actually pulled from the market, that jumped by 68%. There were 400 listings pulled from the Manhattan market just in the last 2 weeks of March. So basically, sellers have yanked everything off the market because right now there are no buyers. Now, the big drop, of course, will be in April and May. Those are usually the two busiest months for New York City real estate. Experts say prices at the end of this could fall by 20-25%, maybe more, when we start to get trading again in the summer or the fall. We saw similar price drops around 9/11 and the financial crisis. So that's kind of the marker right now, is that 25%, 30% drop. But remember, Manhattan prices were already falling and sales volume was falling for 2 years prior to this. So that would be a big drop. Now, what we really need to watch as well is new development. In the first quarter, we saw prices for new development fall by 50%. We now have a 17-month supply. And there's one more piece of news overnight I want to mention. The state of New York, given how critical real estate is to the state, declared real estate an essential industry. So that means we can now have showings, we can have inspections, we can have appraisals. All we need, of course, is some buyers, and right now they aren't around. Kelly, back to you.
An essential industry. Robert, stay right there. For more on how coronavirus is impacting New York's housing market, let's welcome in Bess Friedman. She's CEO of New York-based real estate firm Brown Harris Stevens. So, Bess, I'm going to pick up on exactly what Robert just said, which is that, you know, landlords aren't going to be able to make it through if this lasts for a couple more months, will they?
You know, I think it's a challenging time for everyone. I know there was a mention, Robert mentioned, you know, real estate being an essential service or business. And, you know, I am not encouraging real estate professionals to go out there, particularly in New York City where it's very dense, and show properties. I think that would be very irresponsible. But if they do have business that they're wrapping up, they can meet an appraiser or do a walkthrough very carefully, keeping in mind all the social distancing. But it's going to be a challenging environment for everyone professionally in New York, I think, and around the world. People are struggling. But the one plus side, a tale of two markets, I guess, in the Hamptons, you know, the rentals are gone. Everybody wants to rent a place there. Agents were telling me that they got calls from the Long Island Expressway with people saying, I want immediate occupancy and I'll pay whatever it is to get this house. So people wanted to get out of the city and go to a different place.
Yeah, Robert, what would you add to that?
Yeah, Bess, I just want to ask you a broader question, because when you talk to brokers this week and last week, they say, look, New York is still a great city. It's resilient. Everyone wants to live in New York. My question is, at what price? We've now seen New Yorkers go through 9/11, through Sandy, through these tax hikes, through the SALT changes, the new mansion tax. At some point, they're going to say enough is enough, and the average price is still $1.8 million for an apartment. Do you think that structurally we will see downward pressure on prices over the next few years?
I think, listen, we've already been, as was mentioned, in a buyer's market. We were correcting prices. Actually, the first quarter ended up being very good, if you saw the report. But I think people are still going to want to live in New York. New York offers so much to so many people, and we are such a resilient place. As you mentioned, 9/11, after 9/11, it was very quiet until January. Then all that pent-up demand just burst on the scenes and the market roared. Same thing happened after Lehman Brothers. And I think that will happen again, and people are going to want to live here. Tourism, I think in 2018 was something like 65 million people visited New York City. This is a place that people want to be, and we can't give up on her just because we're going through a tough time.
Bess, on that note, let me ask you, let's say there's someone who thought, you know what, with prices down, with the market challenged, I've been waiting to buy, maybe this is my once-in-a-generation chance to be able to afford something in New York. Could that transaction move forward? Let's say they even took a flyer. So I don't even need to see it. I'll just, you know, I see the listing, I'll buy it. I mean, can that move forward or not?
Certainly. In fact, we can do that, particularly when it has to do with condos. It's easier, and you can do everything virtually, and agents are figuring stuff out like that. So yes, you can do that, and it is an opportunity market. I think if people are willing to, you know, you get a great rate right now, you can take advantage of this. I really think so.
All right, we'll leave it there. Thanks to both of you, Bess Friedman and our own Robert Frank. We appreciate it. Good luck. It's going to be a tough couple of months for everybody. Silicon Valley deal making is also on hold, and venture-backed startups are cutting staff to weather the downturn. Kate Rooney is here with those details out west. Kate?
Hey, Kelly, startups are in what investors are calling survival mode. In order to make it through potentially months with no revenue, they're cutting their workforce to the tune of 4,000 people in recent weeks. Dog walking app Rover cutting 41% of staff Trip Actions, a quarter of its workforce, and scooter company Bird laying off 30% of workers. A few factors contributing to pressure on startups. Venture capital and private equity-backed small businesses aren't eligible for emergency government loans. That's thanks to something called an affiliation rule. The investors they once relied on are also tightening their belts, making it harder to tap them for things like help with payroll. Meanwhile, layoffs are a double whammy for employees. They typically have 90 days to exercise their equity options, and they need to come up with that cash up front, which is then subject to taxes. Meanwhile, their equity may be worth a lot less in this current environment. And on top of that, they're being fired while working from home. I spoke to one Bird employee who was laid off last week. Kelly, she tells me it was a complete shock. They got a normal calendar invite labeled COVID update, but it turned out to be a mass firing across multiple departments. She called how they handled the incident inhumane. Kelly?
You know, I read about that they basically said it was an automated message that said, if you're listening to this right now, you've been laid off, right? I mean, yeah, I know you got to be quick, but that's
right.
pretty
and
brutal.
Bird said, oh, go ahead.
Pretty brutal.
Oh, yeah. She said it sounded like an automated message, and it was only about 2 minutes long. So,
oh, man.
Tough circumstances.
Absolutely. Kate, thank you for bringing that to us. Kate Rooney, we appreciate it. Professional sports are canceled for the foreseeable future. So how are owners trying to hang on to their teams as revenue dries up? We'll explore that right after this quick break.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Wonderful. It's so light and so small. But it's a fraction of the cost of the other devices.
They cost thousands less.
It's insanely user-friendly. You take the hearing test online, the doctor programs in the settings, you don't even need to go into an office.
They're delivered to your door in a few days, and you're up and running in no time.
It connects via Bluetooth to my phone.
You can stream music, and you can answer phone calls.
The audiologist was so incredible. She's full of all kinds of little helpful hints. I love it. They're a game changer for me. I feel like I could take on anything.
It feels great to be in control of my hearing.
Better hearing has never been this easy. Try Lively risk-free for 100 days. Visit listenlively.com.
It's the best of Sunday Night Football. A doubleheader of legendary Sunday Night Football games every night of the week.
That may be the greatest catch I've ever seen.
Football Week in America. Every night this week on NBCSN.
Welcome back. Professional sports remain shut down as social distancing continues. That's leaving franchise owners holding the bag. Eric Chemi is here with a look at some creative tactics they're using to hang on to their teams. Eric?
Yeah, Kelly, that's right. So it's one thing that you've got these teams that are not playing right now, and we know what that is all about. But a lot of these owners, they've got all these other business interests. So you consider, for example, I don't want to name names, but there are a lot of owners in the NBA and the NHL. They own restaurants, they own casinos, they own shopping mall REITs, they own arena concessions, they own cruise lines. Those businesses are really taking it hard right now. So it could mean that owners need to raise capital because they can't afford either their sports teams or their real businesses, but what they're trying to do, they're trying to avoid selling their teams. A lot of these owners, they're looking at creative financing right now, trying to get some sort of loan, something where they can hold on to their ownership because they don't want to give away those stakes. So these owners, they're facing these major losses outside of their regular investments. Bankers say, though, teams are not for sale right now, but teams could be for sale if the shutdown lingers, because remember, there are the rich owners and then there's the almost rich owners, the not so rich owners. They don't have as much liquid cash, they have high leverage, and they've got money-losing teams. So right now there's no deal flow yet, but bankers say the weakest of these owners, they're probably going to get washed out if this continues for a few more months. Kelly, back to you.
Eric, stay right there. Let's bring in George Pine to the conversation. He, of course, is the founder and CEO of Bruin Sports Capital, which invests in a number of sports media and tech companies. George, it's good to see you. And, I mean, who do you think might be the first team forced to sell here?
Well, I don't know that I can speculate on who the first team to sell is, but Eric is exactly right. If people lose liquidity, it's going to impact their other business interests, which could be pro sports teams. The one thing now the leagues look pretty smart at is having reasonable level of debts, having maximum debt levels, really protects the financial integrity of the teams. But if the owner is in these other industries that are hard hit and they have liquidity issues, that's going to impact the situation. So, Eric, you're exactly correct.
George, let me ask you, because I think we're assuming that the owners would have to sell their teams in order to come up with cash or capital for the rest of their companies or for their personal lives. What about the other way around? I mean, do they have to put money into these teams, into the athletes, into the stadiums? And if they don't have that capital available, what could that consequence look like?
Well, that's a difficult situation, no question. And also right now, you have an interesting dynamic with season ticket renewals, which are being adjusted as well. People buying season tickets for next year's, corporate sales, hospitality sales. So your cash flow is going to be tight if you're a team owner. And so depending on where the TV revenue is, you could find yourself in a cash crunch. And again, those owners or teams that might be losing money and that are facing headwinds in other industries, it does present a difficult situation, no question.
Yeah, Eric, same question to you. I'm also curious what you're hearing, if anything, at this point about the major fall season, where obviously everyone had been assuming the football would kind of start the return of normalcy, but now maybe not so much.
Right. So we knew basketball and hockey were on the hook right now. Then it was all of a sudden, hey, what happens to the baseball season? Now we're starting to hear about what happens to the football season, because for college programs, that's the big money maker. And of course, the NFL is the biggest sports league in the country. But I just want to go back real quickly. So you look at the Chase Center, that new arena in San Francisco. A lot of these new arenas, they're tied into these real estate plays around the stadium. So these sports teams, they put a lot of money in to outside of the stadium investments, where they were landlords. They had all these other developments. So a lot of these guys have a lot of real estate leverage too in their sports teams, in addition to outside their businesses. So that's going to be a trend to watch. It's not just the team, but it's these other actual land use properties. But if you've got football questions, Kelly, George is the guy. I think he's like a 4-generation NFL family there that the Pines are.
And George, you have a son headed to Notre Dame in the fall to play football, right? I mean, what is he hearing at this point?
Well, look, I think it's all systems go from an athlete standpoint. You're preparing every day. He's running and lifting every day, trying to get ready for the season, no question. And hopefully that'll be resolved before the fall. Of course, the true answer is nobody knows, and these decisions will be made by the healthcare professionals. Certainly, we're all hoping to have sports back in the fall.
So, final question, George. Do you think there might be any? I mean, it's not like we're not going to know if some of these teams are sold. What about some of the smaller interests? I mean, do you think this is really going to trigger a bunch of turnover in the next couple of months, or does it depend on how long this goes on?
I think it depends how long it goes. However, I'll just tell you that, people are going to have liquidity issues in all businesses, and sports will not be different than that. So within the ecosystem of sports, there are going to be huge pressures for liquidity, and there is going to be dislocation, and there are going to be changes. And the severity of those changes are going to depend on how long the delay is. So if it's 3 or 4 months, I think it's one set of circumstances. If it's 6, 9, 12, or 18 months, you're looking at a very difficult and different situation.
Yep, absolutely. Same goes for everybody else, too. Guys, thanks. George Pine and Eric Chemi. Markets are higher today, but pairing their gains. Dow and S&P are slightly positive. NASDAQ, Russell, negative. We're going to talk about where to put your money to work next.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today. Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know. It's TuneIn Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now, it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
Well, there's no question the spotlight today will focus on Dominique. Given what happened last week, I would think there's some incentive for Dominique.
To listen to conversations breaking down the moments just like this, click on Sports to be part of the discussion on TuneIn.
Not all heroes wear capes, but most wear tights.
And here we go. Now it's underway. Cover on Rowan. Wait a second.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis of the latest WrestleMania, turn on the WWE podcast. Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
It's good to be here tonight. It's an empty building.
For these and more, search sports and scroll down to the world of wrestling.
For every staircase supporting a grand entrance, door frames marking milestones, floors kissed by bare feet, and walls making room for new memories. Protect the pure joy of home with Terminix. We're committed to keeping termites out of your home with our all-new On Guard termite protection system. Always backed by the Terminix promise to keep your home strong enough for all the love it holds.
Welcome back. You're looking at markets where the Dow's trying to hang on to a gain here, about 0.75%. Just got some news from the Congressional Budget Office. They're downgrading their forecast for the economy, no surprise, saying they expect a sharp contraction during the second quarter. They're estimating a more than 7% decline. The annualized rate would then exceed 28%. They mentioned, of course, the declines could be much larger. They see the unemployment rate exceeding 10% in the second quarter and still expect interest rates on the 10-year to remain below 1%. So pretty much summing up the state of things as we just kick off the second quarter here. And on that note, Sandy Villery is partner and portfolio manager at Villier & Company. And Jana Barton is co-director of growth equities at Eaton Vance. They join me now. Not a ton of time, guys. So, Sandy, let me get right down to it. Where do you think investors are safe putting capital to work these days?
Yeah, and I think that's interesting. You use the word safe because, names like Clorox and defensive names have already been, I think, picked over, and I think they're fully valued. I'd rather go with strong growth names that are trading at reasonable prices or historically, 15-year trough multiples and put money to work in those types of names. And that's what we're doing in our Villery funds.
So some examples might be?
We love a company called eHealth. We love a company called Teleflex. Very, very strong balance sheet, very, very strong. They even make, ventilators this particular moment and pure play medical device company. And we love a company called Steris that's going to do well in this environment. I think also do pretty well, looking out the next 2 and 3 years, which I think is how investors really should be looking at this particular moment.
Jana, would you also be looking at healthcare right now?
Absolutely. I think healthcare fits into a hybrid bucket of both growth and defensive play. And even with healthcare being the best performer since we reached the peak of the market through this decline, there are areas of the healthcare space like healthcare services and even some of the medtech device names that he mentioned that have actually lagged. So both valuation support and long-term secular growth is really good there. I would also add information technology, consumer, communication services to the list. There's been a disproportionate sell-off. While correlations have peaked at over 85%, I think that the degree of the sell-off has not been the same. So I really think this is a time to be very selective when you're thinking about long-term positioning, lots of opportunities.
Any one example you could give in terms of communication services?
Communication services has a lot of examples, obviously, within the media space. There's been a disproportionate sell-off. So some of the new guys are doing a little bit better with streaming. But look at Netflix versus Disney, right? Completely different price performance, yet similar businesses to a certain extent. We're pretty active across the board. I would also add consumer discretionary. So e-commerce globally is still less than 15%. And we're doing most of our shopping online these days. So these trends are only going to accelerate. Streaming, consumer spending on online and others within the communication. Think of how you and I are communicating right now. That's not going away.
I was thinking about, are you using a UV light on those packages? You putting your mail in the oven? I mean, the stuff people are doing to make sure their deliveries are safe. Sandy, I actually want to turn to you on a different note, go back to something kind of right up your alley that we heard from Craig Callahan last hour. I asked him who he typically favored some of the larger companies and technology and other sectors. He kind of screens the market to him. Small and mid-cap value jumps out. He didn't really have a reason for that, but is there anything in terms of seeing deep value that has your attention in that segment of the market here too?
Yeah, anytime you look yesterday, the Russell 2000 was down 7%. It's certainly underperformed the S&P 500 by maybe as much as 10%. So I think as you lead into a recession, and I think these things are getting compressed to where we might be going to a recession quickly, and the market's already discounting, maybe even coming out of that since it's forward-looking. But I think a lot of the value is in small cap that is really underperformed. And remember, it leads coming out of a recession. So I think lots of opportunities there, and if people look closely, they're going to see a lot of dislocations, and that's exactly where opportunities are and where money is really made over the long run.
When is the last time that part of the market led?
I guess I'd have to go back about 4 or 5 years to see where it really did. We had actually a 2-year run where small caps did extremely well, and I think we can, as we come out of this recession, it depends on where you think the number of cases are peaking and where you think we are in that cycle. But I believe if you can be very careful and buy these names that are completely dislocated, you're going to look pretty smart when we talk about this about a year from now.
Yeah, it's just like you said, it might just be a rough ride for a little while. How are you disinfecting mail?
It's kind of funny. We're here in New Orleans, so we're a bit kind of in the epicenter here, and our cases are supposed to peak around April 15th. But we take our Amazon packages and we put them on next to the barbecue pit outside and let them bake in the sun for a little bit of time, and then we take them in. So that's how we're doing things here in New Orleans.
Not a bad idea. As our temperatures warm up, I'm going to keep that in mind. Yana, you got a grill handy?
I don't, but I have a garage, so that works as well.
Very good. I appreciate your time today. Guys, thank you both.
Thank you.
Thank you.
Yana Barton and Sandy Villery. Thanks so much for tuning in this hour. As we continue to watch these markets try to hold on to their gains, our breaking news coverage continues in the last hour of the trading day.
And welcome, everyone. I am Sarah Eisen here with Wilfred Frost. Stocks are giving up a sizable rally, though still holding on to pretty decent gains. 1 hour left in another volatile trading session on Wall Street. Let's look at what's driving the action in the market right now. Initial jobless claims surging to a record 6.6 million last week. Jobless claims over the past 2 weeks now totaling around 10 million. Oil seeing a rebound after President Trump told CNBC he expects Saudi Arabia and Russia to announce a big production cut. And the virus itself remains front and center. U.S. cases topping 220,000, far outpacing any other country. Global cases nearing 1 million. Some dire statistics there, Wilfred.
Indeed, there are. There's been plenty of them of late, sadly. We've got some great guests coming your way, including Galaxy Digital founder Mike Novogratz on where he's seeing opportunities. We'll also speak with the CEO of Battelle, the Ohio company, which just received FDA approval for its technology to sterilize medical masks. But let's dive in on the big stories that we're watching this hour. Mike Santoli here to break down the latest market moves. Brian Sullivan has the latest on oil and energy, a roller coaster ride we've seen there yet again today. Kayla Tausche has new details on the relief checks due to Americans. And Bank of America's Michelle Meyer is with us to discuss today's sobering jobless claims numbers. But Mike, let's kick things off with you on the markets.
Yeah, Wolf, obviously wavering a little bit after that early day rally. Take a look at where it leaves us here. It seems we're perhaps tentatively settling into some kind of a trading range above the recent lows. We'll see if that really does hold. And I think, people can throw out these levels that might matter, might not matter tactically. The market has traded very technically just because we are in a bit of a vacuum on relevant fundamental news for a while. So a lot of folks saying in the mid 2300s is something around 2400 would be okay to pull back to without necessarily damaging the idea that we had a relevant bounce off those lows a week ago. And I'll keep in mind that, this downtrend is still pretty much intact. As I say, it's traded very technically. That's essentially where we peaked right there, a little bit over the 2600 mark. Here's the big divide within the stock market, though. It's between kind of acknowledged high quality and low volatility stocks on the one hand. These are a couple of ETFs, HQ and USMV for high quality and minimum volatility. They've handily outperformed, as you might expect. And riskier segments like high beta, the more aggressive stocks, and also that's the small cap, deep value ETF, RZV right there. The interesting thing is there seems to be a consensus that this pullback in the markets has presented an opportunity to buy more stable businesses, higher quality, also higher valued. I wonder if that's the case, though. If you actually think the market has bottomed and might actually get some relief on a lasting basis, it's probably these guys that are more spring-loaded and look more washed out and cheaper to rally. It depends on the game you're playing, though. If you're just picking up quality stuff for longer-term holding or trying to play that rebound.
And Mike, the sort of choppiness that we're seeing today that feels quite worrying when you're up over 2% and then you go back into the red with just 90 minutes left of the session. Is that choppiness actually something that should be encouraging if it persists, as long as it doesn't break out of the ranges you talked about?
I think it should be at least tolerated, if not taken as encouraging, Wolf. It's pretty much par for the course right here. We obviously have coming off a huge volatility shock that doesn't just dissipate right away. But yeah, if you look on a week-to-date basis, there hasn't been a lot of net movement, even though we've kind of gyrated around a little bit. So I wouldn't say that it's necessarily going to go away quickly, but we have had, at least as I said, a tentative trading range developing here so far anyway. We'll see if it lasts.
All right, Mike, we'll see you in just a bit. Got to talk about energy leading the market higher today, sharply up after a huge rally in oil prices. This comes off the back of comments from President Trump to CNBC earlier about a potential deal between Russia and Saudi Arabia. Let's bring in Brian Sullivan on the newsline. Obviously, a welcome bounce, I guess, for oil prices, Brian, that are still down 60% so far this year. What do we know about this potential deal?
Well, I think the people in the market are still asking questions about the deal, Sarah. What deal? I mean, is I think the ultimate question. Perhaps the Saudis and perhaps something done. Everybody let the oil prices move up a little bit, but let's be clear. The Saudis, in their language, have said, maybe not expressly, but it's implicit that everybody's got to be involved. That means the U.S. producers, guys. Of course, 7 major CEOs are coming to the White House tomorrow, in person, I might add. And there's going to be talk about opening up for federal lands and things like that. They're making the point they don't want to bail out. But if the Texas head of oil basically is talking to the Russians, as he said he did today, and the Saudis and the Russians are talking to Trump, and Trump is talking to the oil CEOs, I don't think it's out of the question for some sort of global, coordinated supply cut, a global OPEC. Let's call it GLOPEC. Sounds nice. You can use that.
I do like it a lot, Brian, GLOPEC. I mean, my only question to follow up on that, as optimistic and encouraging as it sounds, is price fixing amongst a cartel, which this is, surely only ever works at the best of times, in the calmest of times. And we're not getting a glimpse of that today, that even with the potential news earlier today before it then got doubted a little bit, we saw a bounce, but we're still at $25 on WTI crude. And add to that weak demand as well. We're playing with some real desperate measures as opposed to something solid that those CEOs tomorrow that go in and see the president can come out of and think, okay, we're in the clear now.
I think back to that great 1979 movie, The Warriors. And I was thinking about that today, right? And how they had this huge gang meeting at the beginning of the movie, and then one gang went rogue. And then it became this chase back to Coney Island, right? And I'm just thinking, if just somebody goes rogue here, even if there is a deal, it's going to fall apart. I mean, they can call in the CEOs of Chevron and Occidental and say, please cut production. Well, if the Russians don't cut it, it's like you first. If you do it, then I'll do it. No, you go. No, I'll go. So it's going to be very hard to accomplish this. I think you're right. This is sort of cartelish-like behavior if it happens in the United States in a certain way. But we also don't want to have, 500,000 people lose their jobs in Williston and Midland and everywhere else in the United States that relies on, on oil and gas to pay the mortgage and put food on the table. It's an impossible situation.
So, Brian, President Trump in the tweet mentioned approximately 10 million barrels, a cut of that size. I think he told our Joe Kernan 10 to 15 million barrels. Is that enough to make a difference? Just give us the sort of scope of how much Saudi and Russia produce on a daily basis and whether that would actually turn things around in a sustainable way, given the huge demand drop-off we're seeing as a result of COVID-19.
It ain't nothing. I'll put it that way. So listen, we don't know what the demand drop is, Sarah. It's the right question to ask that you're asking. Let's call it 15 million barrels a day, which is about the sort of the median of the 100 or so estimates I read every day in demand being taken off. So if you remove 10 million barrels a day, you're still oversupplied by 5, but you're not oversupplied by 15. And so, yes, any cut, especially a cut of that magnitude, would matter to a point, but you'd still likely be oversupplied. Can they do it? I think you asked. Russia and Saudis together at about 23 million. So the president was suggesting Saudis and Russia just together could do 10 to 15. That's basically taking half their country's production offline. I don't think that's possible. And by the way, I talked to some people in Aramco today via WhatsApp, and they said any deal has to include the United States. Big White House meeting tomorrow. I'll see at the top of the 5 for fast money. I'm going to get off the phone and actually get dressed.
We will see you then, Brian, and no doubt we will hear the word GLOPEC
Thanks for sharing.
as well. We look forward to it. Energy, by the way, the best performing sector today. Whatever you believe will happen, oil prices higher, energy sector higher by 7.5%. It's the only sector that really is rallying hard. The broader market's up 1.1% with 52 minutes left. Now, Americans are waiting for coronavirus relief checks from the government, maybe waiting a lot longer than they'd hoped. Kayla Tausche's got the details for us. Hi, Kayla.
Hi, Wilfred. Well, how long you're waiting depends on exactly how you file your taxes and whether you file your taxes. House Democrats have been seeking guidance from the IRS and circulated a memo earlier today with some of that information that was obtained by NBC News. In it, they say that the roughly 60 million Americans who file their taxes electronically and have direct deposit on file with the IRS as well will see that payment the week of April 13th. After that, roughly 3 weeks after that, is when the IRS will start issuing those paper checks to an estimated 100 million Americans. They will start by processing paper checks for the lowest income Americans first, but they estimate that they will be able to process only about 5 million checks per week, and that in totality, that group of Americans will likely take up to 5 months to receive those paper checks. Now, of course, these are estimates. There are a lot of filers and people who do not file that the Treasury Department is seeking answers about how to get that money to. But this is the first contour of exactly when and how this program is going to be run that we're learning about. And certainly a lot of Americans are circling those dates on their calendars. Wilf and Sarah.
Kayla, thank you very much for that. I mean, it's a huge swing factor in terms of date. We'll have to wait to see if that comes through. And another big part of the discussion we'll have you back for momentarily, no doubt, certainly later in the show, about the SBA lending program. Meantime, let's bring in Bank of America's Michelle Meyer. Michelle, we're going to get to your GDP forecast, which you've been updating of late, and the unemployment numbers as well that we got this morning. But what's your take on how important it is to get those checks out to Americans, and how big a swing factor it will mean on your GDP forecast?
Sure. I mean, fiscal stimulus is extremely important in terms of being able to provide a backstop for the economy right now and offset the fact that the private sector has lost a lot of jobs. Income is being destroyed. So the quicker the government can provide those in most need with the appropriate funds, the better it'll be for the economy. So the more that this is lagged, the more we're going to see consumer spending cut back, and the more the economy is going to suffer in the next few weeks. So, yes, the timing and the magnitude of the stimulus are absolutely critical.
Yeah, 5 months, as long as 5 months for paper checks if you don't have direct deposit. Where are we on unemployment right now, Michelle? What's your best guess? Are we in double digits yet?
I think we're close if we're not there yet. So, obviously just about 10 million people filed for unemployment insurance between this week and last. Not all of those will officially show up as unemployed in the official statistics that are released in early May for the month of April, but a whole lot will. And we're not done yet in terms of unemployment filings. So, you can easily see in the April data, between 10 and 14 million people lose their jobs, show up as unemployed in the statistics, and that will send the unemployment rate into double digits. So this is happening very, very quickly, and that's the nature of the shock. This is an acute shock. It's shutting off parts of the economy, which is causing people all at once to be losing jobs.
Michelle, your latest GDP forecast has now 3 quarters of contractions for Q1, Q2, Q3. Talk us through what the latest numbers are, how big the bounce you're expecting in Q4 is. And my final question within that is, what if there is a second wave of this disease? Is that factored in to you expecting a bounce in Q4 or not?
Yeah, so to walk through the forecasts, Q1 is likely to be negative just because of the last 2 weeks in March looking so weak for the consumer. So we're looking for a 7% decline in the first quarter annualized as a result of these lockdown measures prompting people to shelter in place and shutting down businesses. Q2 is going to be more extreme, so we think we're going to see a 30% decline on an annualized basis. Q3, we think we're going to see about a 1% drop. So we don't have the sharp snapback that a lot of other people have for the third quarter. We think it will take longer, and it will take longer because it will take time for the economy to reopen. You can shut the economy down very quickly. That switch can go off fast, but to put it back on, there's going to be frictions, and we do think it will take time. So it will unleash some pent-up demand and spending, and we think we'll see that show through probably some point in the summer with the consumer coming back a bit. But it will probably take time for business investment to recover, for housing investment, for inventories to be restocked. And to us, that will happen more into the fourth quarter. Now, you raise a really important point, Wilf, which is about this potential for a W. So you could see an area where if the virus isn't appropriately contained or it's spread elsewhere in the globe and there's a risk of it coming back here in the U.S., then sure, you can open up the economy. People can start to emerge again, start to go back to work, to restaurants and the like. And then there's a second spread, which would cause this kind of W shape. So I do think that this is going to take some time to get out of. It's not going to be a dramatic snapback, unfortunately.
Michelle, thank you so much for that. And we like the Bank of America securities in the backdrop, which of course I know is always in your home, not just recently.
Of course. It's my decoration.
Michelle, thanks so much. Still to come here, President Trump praising one way to get more masks in the hands of those who need them.
I love the sterilization of the mask. So, Ohio company, you can sterilize the N95. You can sterilize that mask for up to 20 times.
After the break, we will speak with the CEO of Battelle, the Ohio company that the president mentioned just there, about their efforts to sterilize masks. We're back in a couple of minutes.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
It's TuneIn Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now, it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
But there's no question the spotlight today will focus on Dominique. Given what happened last week, I would think there's some incentive for Dominique to
listen to conversations breaking down the moments just like this, click on Sports to be part of the discussion on TuneIn. Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Rays Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
Watch and listen live on the CNBC app.
At Credible.com, we've helped tens of thousands of people save money by refinancing their student loans. In 3 minutes, we'll get you actual rates from multiple lenders. We could save you hundreds of dollars a month.
Visit Credible.com to see how much you could save.
Hi, I'm Hanno. I created Gabi because most people overpay on car insurance. Gabi is a free tool that saves you money by finding the best deal. Gabi users save more than $800 per year on average. Go to Gabi.com and stop overpaying for car insurance.
When we founded Tommy John, Tom was obsessed with how to make underwear truly comfortable.
So we reimagined comfort through fabric, fit, and function.
We use soft, breathable, lightweight fabric with stay-put waistbands that never dig and stretch where you need it. We made a women's line so comfortable there are no visible panty lines and no wedgies, guaranteed.
For a limited time, it's Tommy John's spring sale. Go to TommyJohn.com right now for up to 30% off site-wide. That's TommyJohn.com. Log on now.
$43 minutes left of trade. Ohio-based research development company Battelle is starting to make sanitized masks. You know what? I think shot is not working. Wilfred, I'll send it over to you.
I will pick it up. Indeed, Sarah. So not only has this company created a rapid diagnostic test, but Battelle has also received FDA approval for its face mask decontamination system, which is authorized to sterilize 10,000 masks a day. And Battelle's CEO, Lou Von Thayer, joins us now. Louis, thanks so much for joining us. Much appreciated. Sorry for the confusion in the intro there. Tell us about this sterilization. We'll come to the testing as well in a moment, but tell us about the sterilization and how confident you are that it creates good as new masks and how many you can do per day.
Yeah, thanks, Wilfred. So we are very confident. We actually did the R&D on this process about 5 years ago for the FDA. So we knew it worked. What we had to do is spin up quickly. So literally in 9 days from the time we had the idea, our team built the first system, tested it, and about 6 days into that, we got data back to the FDA. The FDA worked very diligently, and 9 days later from our submittal and a lot of back and forth, we actually got the approval. So we basically can do 80,000 masks a day per full system. And every system's made up of 4 containers. A container can hold up to 10,000 masks at a time, and we can do a couple cycles a day as we work through this. It's a relatively complicated process because you have to treat the masks that come back from the hospitals as if they're contaminated. But we have great confidence in this, and we've had the data to prove that it works.
It's such a great story, Lou. Sorry about the technical issues. I try to highlight companies like yours every single day that are really game changers as we fight this virus. So tell us how much you can ramp up that 10,000, I think you said, masks per day, and where those masks are getting cleaned and disinfected and sent. Are they going to hot zones like New York?
So thanks, Sarah. So we're up and running in Columbus, Ohio. We're cleaning masks as we speak. We have a system on Long Island right now in New York. It will go operational right about now today, we believe. We just finished the build out in the last day or two. So that'll be up and running. We have a system that just arrived to Seattle. They take about 48 to 72 hours to get set up and test in. We also have one going to Boston on Sunday and another one to New York City right after that. We believe we can do at least 5 of these a week. We're working the supply chains, and our team's literally working around the clock. A lot of conversations the last few days with FEMA and the government to look at options of how they can even help us move faster. Have talked about potential of many tens, maybe even 100 of these systems put around the country in the next few weeks.
And Lou, I'm interested, who are you going to most of all for guidance on what is needed? Is it local governments, state governments, or is it the federal government in terms of where you're setting up shop and whether you're doing more testing or more masks?
So we started working locally. We looked at the hot spots, working with the hospital associations to understand where the biggest shortages were, where they saw the most cases coming into. In recent days, we've had more and more conversations with FEMA, and we're starting to look to the feds to help us find the best places to put these. And then once we have those places picked, we're working with the local communities, the local health officials to figure out where we can put the system and what's the best way to work logistics to get to and from that to the hospitals.
And talk a little bit about, I know you've done this and it's huge and gotten the FDA approval. You're also working on rapid testing for COVID-19. What's the status of that?
Yeah, so Sarah, we started in late January. There was a day that it looked obvious. I think Singapore had over 100 cases that day that the virus was coming here. So our team went into action that day, and we actually have about half a dozen projects going on right now. So we've completed the one that we've talked about for cleaning masks just in the last 2 weeks, working with the Ohio State University. We've managed to we actually developed a new test that's very similar to the CDC test for COVID-19, but it uses a slightly different equipment and slightly different reagents, which helps supply chain. We've worked that. We took equipment out of our labs. Ohio State took equipment out of their research labs. We combined it into their clinical labs, and we are now up and running. I think their leader told me they ran about 800 tests yesterday, going to 1,000. We have the capacity for 4,000 local tests a day with about a 5-hour turn.
And you're a nonprofit organization? How do the economics here work for you?
We are. So that's been very interesting so far. We came into this with a very strong balance sheet. We were growing and doing a lot of interesting work. So we told our team, the heck with it, just run fast. I'll figure that part out later. So we've started by recovering for use costs for the organizations that we're doing tests for, doing masks for, doing other items. We think there's a good chance the federal agencies will be able to come in maybe in the next week or two and get us a contract. If that happens, we'll be able to drop some of those costs immediately and get the recovery costs out and basically just operate at whatever it costs to actually run the operations.
Keep it coming. Lou Von Thayer, thank you so much for joining us.
Thank you, Sarah.
Should mention, by the way, the markets have improved again a little bit in the last 20 minutes or so. We're now up 1.4% on the S&P 500. 37 minutes left of the session. We've got some breaking news on Uber and Lyft. Deirdre Bose has got the details for us. Hi, Dee.
Hey, Wilf, take a look at the ride-sharing firms' shares. Uber and Lyft, they're down about 7 to 8%, though off the lows of the session. There's a report out today from The Information citing sources at the company saying that the ride-sharing business have shrunk by about half in recent weeks compared to about a year ago. And while that is a huge drop in bookings and likely to hit revenue, it shouldn't come as a huge surprise. Remember that a few weeks ago, Uber CEO Dara Khosrowshahi, he held a phone call for investors and analysts and said, look, we are stress testing, we are accounting for this. He said that some of their major markets like Seattle had already seen drops of that magnitude or more. He also outlined a worst case scenario, which according to this report, we are not at yet. He said that for the whole year, if gross bookings on the ride-sharing front were down some 80%, they would still have about $4 billion of cash to essentially survive that. So guys, the hits keep coming. Obviously, ride-sharing is under a lot of pressure during the outbreak. So this shouldn't come as a huge surprise, but that is a massive, massive drop. Back to you.
Yeah, finally putting a number on it. Deirdre Bose. Deirdre, thank you very much. We've got about 36 minutes left of trade, and we're higher across the board. We've improved, as Wilfred said, just over the last few moments. Every sector in the S&P is higher right now, led by energy, except for consumer discretionary. That's the one in the red. Utilities and staples also doing pretty well today. Nasdaq's up almost 1%. S&P's up 1.5%. Still ahead, investor Mike Novogratz says the mass carnage in the market is over. He'll tell us where he's looking for opportunities now. Our special coverage will be right back.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
Evolves from New York to London and around the world. The stories that matter to your health, your job, your 401k. Stay connected, stay informed with CNBC. Watch and listen live on the CNBC app. It's the best of Sunday Night Football. A doubleheader of legendary Sunday Night Football games every night of the week.
That may be the greatest catch I've ever seen.
Football Week in America. Every night this week on NBCSN.
33 minutes left of trade. Dow up more than 250 points. The federal government's small business loan program meant to go into effect tomorrow, but maybe running into some speed bumps. Our Kayla Tausche has the latest on that program, and Kate Rogers has more on what small business owners are saying. Let's start with you, Kayla. What do we know at this point?
Well, Sarah, it's supposed to be unveiled in just a matter of hours, but many banks do not have the guidance from the Small Business Administration, do not have an application to become an SBA lender to participate in that program. As such, a lot of them are raising concerns with the Treasury Secretary and several calls arranged by industry groups in the last few days about some structural issues and broader issues about how quickly this rollout is expected to be put together and some issues that might affect its ability to be rolled out in a seamless manner. First, the small banks have concerns about the interest rate, that 0.5 percentage point that would be the interest rate on the loan after 2 months if it's not forgiven. They say because their cost of capital is so high that they would have to issue these loans at a loss and have asked the Treasury Secretary to change that rate, to change that dynamic. Unclear if that's something that will happen. Second, the big banks have raised concerns about some of the anti-money laundering and fraud provisions that they abide by for all of the loans they make. But in this case, because speed is so important, they say that if they don't have those regulations waived, then they can't issue loans for companies they haven't done business with in a timely manner. They would have to go through a normal due diligence process. Part of the issue there is that if a loan is found to be taken out in a fraudulent way, the bank might have its guarantee by the government at risk, and they would have to be on the hook for the value of that loan. They don't want that to happen. And then finally, there's just the technical issue. More than $1 trillion of demand is estimated. About a third of that is going to be available. There's going to be a feeding frenzy, and many executives privately worry it could look something like the rollout of healthcare.gov in 2013. Guys?
Kayla, thanks for that, and stick around. We'll have a bit of a discussion in a moment. But first, Kate Rogers has been focusing specifically on the small businesses and how they're fearing how this process might roll out.
Hi, well, that's right. We've been hearing a lot of concerns and frustrations from Main Street, and we're learning a bit more about what's been going on behind the scenes. So we learned that the SBA and Treasury did have a call with small business and Main Street trade groups yesterday. We talked to two sources who were on the call. They said that there are still many questions about program readiness, and trade group representatives were questioning if officials were confident that banks would lend with 0.5% interest rates. They didn't say organizers if they were confident or not. They just instead justified those very low rates for small businesses. It also seemed that they were still working out how to handle independent contractors. One source said that this is likely why contractors were punted to filing dates for next week, because the SBA and Treasury are unclear on how they should be handled. An official familiar with the PPP program did tell CNBC that the official guidance for banks is not yet finalized, but said they are still aiming to launch this program tomorrow. Both of these trade group sources told me their biggest concerns were that the banks don't have enough clarity. One even said he has no confidence that this will actually go live tomorrow because the Treasury and SBA are just not coordinated and on the same page. We did reach out to the SBA for comment, and we will bring you anything we get as we hear. Back over to you guys.
And Kate, that from all the banks I've been speaking to is the key thing. The final point you said, that official guidance on the program from the SBA, that it hasn't been finalized and therefore hasn't reached the banks is why the banks can't say they're ready to go yet. As I reported earlier, one of the major banks I spoke to said that would mean they would not, in all likelihood, be ready to go by tomorrow, even if it came later today. They needed that guidance, they said last night. A slightly more optimistic take from another bank I spoke to about an hour or so ago was that if the guidance came in the next couple of hours, they would do all they possibly could to be ready by tomorrow, but could make no promises. And the very fact that that is the optimistic take with 8 hours left, that they're not ready to go as things stand, kind of paints the full picture. Though one final slight positive offset, I would say, is that both of these large banks suggest they could be ready by Monday. They just need to hit the pause button, come together over the weekend with Treasury, with the SBA, and try and iron out these remaining creases. I know that's not much to go to the companies that really need the money now, but at least it's not, we'll never be ready. It's just we're not going to be ready by midnight as things stand, guys.
Yeah. Wilf, I would just say, I mean, these small business owners are waiting for this money right now, and I think that it's a matter of when they're going to get it. So while it will be available on Monday, they need it tomorrow, and they were told they could potentially access it same day, which is a huge difference in time for them.
It is. It's a huge difference. And again, I go back to some of the things I've reported before about what the big banks say. They feel like they were not consulted early enough by the government in terms of what was going to be needed on an operational side. And Kayla, I don't know what you've heard about that side of things, that an arbitrary target was set, and it's just been trying to move heaven and earth to get to it. And we're too late in the day now to be able to say with any confidence that the target will be met.
Well, and certainly one can appreciate the expeditiousness with which the government is trying to make this happen and get the money into people's hands. But the realistic part of this is that normally a rollout of this magnitude would be something that you would budget a year for, to build the back end, to get the regulations finalized. They're trying to move heaven and earth in just a week's time, and that's going to be difficult. There is a problem, though, Wilf, because this is a first-come, first-served program. If they end up having to do a partial rollout tomorrow, with many banks telling their customers, we will have this program up and running by Monday, there's a real question about whether that would open the door to class action lawsuits by people who say, hey, we were left out of this funding simply because our relationship bank wasn't able to participate in this because the government didn't get them those guidelines. So those are some real problems that you could run into if you have this done in a fractured way. I know the government wants to do this all at once if it can.
And that, of course, Kayla, another factor that only increases the likelihood that Treasury will have to increase the initial $350 billion figure, which was something a lot of the bank's executives were saying, even if they'd got things going on time all at once, that this was likely to be drawn down fairly quickly. Kayla, thank you so much for that. Still ahead, online pet supply retailer Chewy due out with earnings after the close. We'll speak with that company's CEO about whether they're seeing a bump in online shopping amid the lockdown. As we head to break, here's a check-in on bonds. Yields mostly lower today, though not as big moves as we saw over the last couple of days. 10-year, 0.62%. S&P 500, by the way, up 1.25%. We've got 25 minutes left of the session. We'll be right back.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
Happy birthday!
What a troll.
Trolls World Tour. Rated PG in theaters and at home on demand April 10th.
Is your credit card debt stressing you out? Take control. A personal loan could help you crush high interest rates and reduce your monthly payments so you can get out of debt faster and save money. Whether you're a credit stud or a credit starter, at Credible.com, we help you find great rates from multiple lenders. In 3 minutes, get actual pre-qualified rates. Have the money you need as quickly as tomorrow and start living your life.
Visit Credible.com to see how much you could save.
For every staircase supporting a grand entrance, door frames marking milestones, floors kissed by bare feet, and walls making room for new memories. Protect the pure joy of home with Terminix. We're committed to keeping termites out of your home with our all-new On Guard termite protection system. Always backed by the Terminix promise to keep your home strong enough for all the love it holds.
About 26 minutes left of trade. We've got a rally of about 200 points on the Dow. Let's bring in Seema Modi for the latest coronavirus headlines. Seema.
Sarah, the nonpartisan Congressional Budget Office is out with some stark estimates for the economic impact of the pandemic. It projects U.S. unemployment rate will top 10% and that GDP will sink more than 7% in the second quarter. Those estimates are based on data available through last Friday. The CBO says more recent figures have been worse than anticipated. The federal government has reportedly sent out nearly half its stockpile of ventilators and only has about 10,000 left. According to University of Washington experts, that's about 1/3 of the ventilators needed by mid-April. Michigan Governor Gretchen Whitmer is extending the virus-related school closings in her state.
All in-person instruction for K-12 students will be suspended, and all school buildings will be closed for the remainder of this school year. This doesn't mean our kids will stop learning.
As more parents push for e-learning. As always, for more coronavirus coverage, head to CNBC.com. Sarah and Wilf?
Seema, thanks so much for that. We're high by 1% and we've got 22 minutes left of the session. And after the break, investor Mike Novogratz will join us and tell us whether he's buying or selling during these volatile times.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know. It's TuneIn Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now, it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
But there's no question the spotlight today will focus on Dominique. Given what happened last week, I would think there's some incentive for Dominique.
To listen to conversations breaking down the moments just like this, click on Sports to be part of the discussion on TuneIn.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today. Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Do all the good that the world needs. But right now, the world needs all the good that we can do. To everyone working to keep America strong, thank you.
there's only one Robert Herjavec.
Your valuation is nuts.
And only one...
Now that is the winner.
Shark Tank.
Always be closing.
Shark Tank. Tonight starting at 8 Eastern. CNBC. Get yours.
Dow's up about 240 points here, 20 minutes left of trade. Joining us now is Mike Novogratz, Galaxy Digital founder and CEO. Mike, you know, some remarkable resilience here in the market given those record unemployment claims, 6.6 million Americans filing last week on top of the 3.3 the week before, and the still very uncertain trajectory of this virus in this country. How are you looking at the market these days?
I think, you know, we had a kind of historic sell-off with kind of a max panic that hit about a week ago. And then you had a Fed-induced rally. I personally used a lot of that rally to lighten up positions, to make my portfolio much simpler. I think we're in a period of real uncertainty here for a while. The market is certainly capped up at 2,800. There will be plenty of sellers as the real economy is deteriorating and there's a lot of uncertainty of where it can go. There are buyers below because we've, you know, like I said, we had a pretty much a seller's exhaustion. So I think we're really range bound for the foreseeable future. The kind of broad range, 2,000, 2,800, and the narrow range, probably, you know, 2,200, 2,600, 2,400, 2,600. And so I think it's a trader's market. It's also more of a fundamental market. The Fed putting foam all over the runway allowed lots of the dislocations to kind of come back together. So both in fixed income and equities. And now I think companies that are going to do well in the long run will find support, and companies with broken business models are going to really be tested. And so, you know, it's more of a long short market than it was when it was just all liquidation. So I'm doing less and trading the range.
I guess, Mike, it's a sign of how long this volatility's been going on that you've had time to grow that excellent moustache as well. I guess my question is whether the volatility itself and the proper functioning of markets, whether the worst in that sense is behind us. And if we do therefore start to reapproach the lows on the S&P 500, is that something that you would use to buy things more aggressively again?
I think the volatility is the worst is over by a long shot. Right? We had record dislocation. I don't think we're going to see that again. Interesting. Some of the big hedge funds like Millennium and Citadel, who had big drawdowns, are all backed up on the year, which means the Fed injecting liquidity in their risk management process allowed them to kind of put Humpty Dumpty back together much faster than normal. But now I think fundamentals take over. And if the economy, if we stay shut for 6 weeks, 8 weeks, if we don't get this economy open, the market will go lower. And so a lot of it's, are we going to, you know, get the economy open? And that's, listen, the first move in that was we've got to save the healthcare system. We've got to build excess healthcare capacity. And I think, you know, the government's doing a great job of that. Certainly here in New York, from Javits Center to the Mercy Ship and all the other hospitals they're setting up. And it looks like we're going to get through this painfully, but we're going to get through this without breaking the healthcare system. And so now I think the government needs to pivot, and I think private industry is going to pivot to testing. You've got to get diagnostic tests for people to know if they have COVID and if they have the antibodies, because people don't want to go back to work until they feel safe. And so the faster we can get people tested that, hey, I've got the antibodies, I'm safe to go back to work, or there's a safe environment, you know, then we can get people going again and the economy will pick up. That's not going to happen in the next week or two, but it could happen in the next, 4 to 6 weeks.
Yeah, we hope those tests ramp up for sure. Mike, you said you were taking the strength in the market that we've seen lately as an opportunity to lighten up. Tell us a little bit more about how you're positioning, and especially around Bitcoin, because that's your firm now, Galaxy and Digital. A lot of people look to you for the Bitcoin calls. Didn't exactly hold up as a safe haven in the first quarter.
So Bitcoin is the thing that I'm most excited about. So I trade a macro hat and a crypto hat. And in the macro portfolio, like I said, I've kind of taken the risk way down because I see more uncertainty. The one story that is so crystal clear to me right now is Bitcoin. Right? We've got central banks around the world monetizing their debt. Right? We're going to have $4, $5, $6 trillion of fiscal debt monetized by this. That literally is a printing press. It's exactly why Bitcoin was created. And so Bitcoin's had a big day today. At one point it was up to 7,000 where it started the year. I think it's 6,800 or something now. I am seeing investors I never saw before, hedge fund investors, high net worth investors, getting into Bitcoin for the first time. And so, like I said this in a tweet, this is the year for Bitcoin. And if it doesn't go up a lot by the end of the year, I think I might just hang my spurs. Because if it doesn't go up now, I'm not sure when it will. But we're seeing real flows into Bitcoin. It's a hard asset. And we are literally, it's not just the U.S. that's going to monetize. But, money doesn't grow on trees. And right now, it feels like we crossed the Rubicon where everyone feels like money grows on trees. I think the Fed's doing the wrong thing. It's just we're going to debase the value of fiat.
So Mike, give us a number, and if we don't, just so we can gauge your level of expectation, where should it reach in 6 months? And if it doesn't, as you said, you'll kind of give up on Bitcoin. I think it's a really interesting swing there. We should have doubled within 6 months. We really should have. This is the time, and maybe it's within the end of the year. Retesting the old highs up to 20,000. Again,
Mike, the problem with your theory, sorry to cut you off, but everyone wants dollars now. I mean, there's a scramble for dollars, and we've seen the dollar rise in a period of stress. And I think it shows that, when push comes to shove, we may be monetizing and money doesn't grow on trees, but dollars are still in demand and are valuable.
That's always first reaction, right? First reaction is to get to safety. And all of a sudden, though, people are going to say, wait a minute, what are they doing to the dollar? And so that's when we come up with the next fiscal package, which will come up, I'm sure, within the next 4 months, another $2 or $3 trillion because the first one wasn't enough. You're going to see more and more people migrate. I'm telling you, I'm seeing it as we speak. I'm getting calls from real big investors who had never thought about it before and saying, tell me about this Bitcoin. Tell me about this company. And so, I added to my position today, and I've already got a decent, large position. And so that's the one big bet I have. And then on the other side, being more agile.
Mike Novogratz, thank you for joining us. We'll hold you to that Bitcoin double call, and we'll talk to you soon. We do have some breaking news, though, now on the Defense Production Act. Seema Modi with the details. Seema.
Sarah, President Trump invoking the Defense Production Act, calling on companies General Electric, Hillrom, Medtronic, ResMed, Royal Philips, and Vire Medical to secure supplies they need to build ventilators needed to defeat the virus. He says, I'm grateful to these and other domestic manufacturers for ramping up their production of ventilators during this difficult time. Today's order will save lives by removing obstacles in the supply chain that threaten the rapid production of ventilators. Of course, over the last 2 weeks, we've seen ventilator manufacturers like General Electric announce a tie-up with Ford to increase production. Ventec and General Motors doing something similar. But clearly, the shortage of ventilators facing this nation is very important and very dire, and that this Defense Production Act hopefully will increase the urgency for these companies to produce more. Sarah, back to you.
Absolutely. We hope that is true. Seema, thank you. 12 minutes left in the trading day. We are now in the closing bell market zone. Commercial-free coverage of all the action going into the close. CNBC senior markets commentator Mike Santoli here, as always, to break down these crucial moments of the trading day. Today, we've also got CNBC contributor Stephanie Link here as well.
Let's kick things off with the financials making a move higher today. Goldman Sachs CEO David Solomon joined CNBC earlier to weigh in on the future of dividends at big banks.
European banks are in a different place than U.S. banks, and European banks also have dividend, which is paid once a year, is the vast majority of their capital return and a very, very significant part of their earnings. Here in the United States, it's a much smaller part of capital return. We've already, as an industry, stopped a significant part of capital return, so we're in a position to lend to our clients. But it's my expectation we'll continue to pay our dividend.
And the bank's broadly up about 1% or 2% today. Stephanie Link, have you been looking at the banks, and does the dividend yield play a part in that consideration, or is 4%, 5%, 6% irrelevant when the stock moves that much most days?
Well, I've been looking at some of the U.S. big banks that have gotten hit really hard, like a Wells Fargo we've talked about, like a Bank of America. I've owned them for a while, but I have been adding to them definitely on yield. Look, I mean, you know this better than I, Wilf, that the European banks are undercapitalized versus the U.S. banks, and they have different regulatory requirements. And as a result, I think the U.S. banks over the last several years have been able to take market share from the European banks, and we haven't had to deal with negative rates, at least yet,
So I think the banks are in a bit better of shape. And to David Solomon's comments about them already suspending the buybacks, that's a good thing so that we can preserve the dividends. And I do think these valuations are very attractive. So I am absolutely adding on the weakness.
What are the valuations in banks telling you, Mike Santoli? I mean, the group is up today, 2.4%. This is a group that's 35% from its recent 52-week high. One of the harder hit parts of the market.
Yeah, the valuations are telling you that the market is applying a kind of recessionary scenario to the valuations, even if the experience of the banks in terms of loan losses and all the rest won't be nearly as bad as we experienced a decade ago. I do think that's what it tells you. I mean, I think you, again, can take the CEOs of these banks at their word that the dividends appear secure and that they're committed to them. And if you're going to be constructing a portfolio of, let's say, 3.5% to 4.5% dividend yield stocks that look like they're kind of money good on the dividend side, then I think they're in there. But you know, we just don't know what the duration of the wear and tear on the credit books is going to look like for the market as a whole. And I think that's what's the overhang. Not to mention the fact that the 2-year note yield's at 0.2%. And so therefore net interest is hard to come by.
Zoom video shares are under pressure today after a ban by Elon Musk's SpaceX. Deirdre Bosa with the details on this story. Deirdre.
Sarah, after surging so much this year, it feels like the hits just keep coming for Zoom lately. It's not just SpaceX banning the app, also NASA prohibiting its employees from using it on security and privacy concerns. Now, on top of that, the FBI has warned against Zoom bombing. The company is also under pressure for sharing data with Facebook and certain other vulnerabilities. Now, CEO Eric Yuan, he did confront some of these issues this week in a post and said that they are taking steps to address them. He also said that Zoom, though, saw active daily users spike to 200 million in the month of March. That is a huge increase. It just continues to add users. Now, Zoom shares, they are down more than 10% today. For the week, they're down about 20%, eating into some of those huge gains so far this year. Back to you.
All right, Deirdre, thank you. Stephanie, how do you view these stocks? The fact that, you know, there's a Zoom preschool going on in the room next to me, and so many other people are using it. And so it seems like an obvious bet, but then, you know, you look at the valuations or privacy concerns. Where are you on these kind of names?
Yeah. I mean, obviously the trend is very powerful, and the stock has done amazingly well, up 82% year to date. Yeah, I can't really explain the valuation, especially when I look at Microsoft, which owns Skype, and they said that their usage is up 70%. And then I look at Cisco and WebEx, and they have better security platform. And then you do have some of these issues with Zoom on security and privacy and such and so forth. So I like the trend very much. I think this is a name, Zoom. If it were to pull back, it's certainly something to consider. But there are other ways to play this theme, and they're seeing equally as great growth. And valuations are a lot more palatable.
We should mention the broader markets are doing well again, up 2% or so on the S&P 500. The Dow up 435 points. The high was up about 500. And we've got about 6 minutes left of the session. Boeing offering voluntary layoffs to its employees. Phil LeBeau's got the story for us. Hi, Phil.
Hi, Wilf. Not a surprise given what we're seeing in the airline and aviation market. So as you take a look at shares of Boeing, keep in mind that the company does plan to offer voluntary layoff packages. They'll be ready in the next 3 to 4 weeks. Still unclear how many employees they're looking to essentially move off the payroll through these packages. Remember, there is no production going on up in the Puget Sound area of commercial aircraft. That ties into what's happening with GE and GE Aviation. As you take a look at shares of GE, the company announcing that it will be furloughing up to 50% of its engine manufacturing staff in Ohio. That you should keep in mind when you look at GE and these furloughs. They're likely to last maybe 4 weeks. And again, this is all about whether or not we will see some kind of resumption of normalcy when it comes to aircraft manufacturing over the next month and a half. Don't forget, tonight on Mad Money, you do not want to miss Larry Culp, CEO of General Electric. He will be Jim Cramer's guest. They'll not only talk about this, they'll probably talk about ventilators and the health of GE. You do not miss this tonight on Mad Money. Guys, back to you.
Phil, certainly we'll be tuning in for that one. On Boeing, where are we with bailouts in inverted commas or government aid? And will factors like layoffs, albeit voluntary layoffs, I get, change the bargain in terms of what the government is likely to be willing to offer?
Well, they're waiting for the final terms from the government. That's the key thing that they're waiting for right now, Wilf. So once they know that, once the Treasury Department says, Do we want warrants in the company? Do we want to have loans at a certain interest rate? Once they have those particulars, then Boeing will make a decision in terms of what it believes it needs from a federal bailout package.
Hey, Phil, it's Stephanie Link. Do you think
volatile.
the IATA...
Oh, go ahead, Stephanie.
Oh, sorry. I just wanted to ask if, Phil, if you think the projections for the IATA seeing traffic for the year down 38% year over year, do you think that is actually now like the base cases, or do you think that there's a lot more downside? Because I thought that number was pretty aggressive.
I'm not sure. I would say there's a lot more downside, but based on what I'm hearing from airlines about May and June, I wouldn't be surprised if we see it go even lower. So, no, I don't think that is overly aggressive at this point.
Okay. All right, Phil LeBeau. Phil, thank you. Stephanie Wyatt, what are you doing with the airlines and the broader industrial sector, the Boeings and the GEs?
I don't own any of the airlines. I've always viewed them as trading stocks. I still own a small piece of Boeing because I think if you were to do the sum of the parts, the defense business is worth $70 a share. So that I think is your downside. And that I wouldn't feel good if it went there, of course. But I think that is absolutely your downside. And I do think you are going to get some sort of a bailout package of some sort. And the company does have $15 billion in cash and $9 billion revolver. So the question is, can the airlines pay Boeing in the second and third quarters? And that's going to depend on what kind of bailout they get. On the industrials, I absolutely have a barbell. I have some very conservative names. I like L3 Harris, which is on the defense side, but at the same time, I also own Caterpillar because I think the dividend yield is interesting. What I want to own is I want to own some names that are going to keep me in the game in terms of performance in the near term, but then have upside as you come out of this and you see better growth down the road. So I'm trying to take that barbell approach, but quality, good balance sheets across both segments.
Mike, for the likes of the airlines and Boeing, I mean, you were discussing earlier how things like the Russell Deep Value might be most geared for a big bounce, but the sector-specific and stock-specific companies that were so directly hit by the virus, haven't they already bounced quite a lot anyway, like a Boeing or the airlines?
Boeing for sure. I do think that's really more trading the expectations for a bailout. I don't think that's essentially the market trying to extrapolate out to an actual full-fledged recovery. But yes, there have been absolute bounces, and I think that the kinds of things that bounced the most last week when we got up 20% in the S&P in 3 days is basically the kind of battered, somewhat junky, somewhat riskier stuff and more cyclical stuff that would more likely lead in a further rally if we were to make some more room between us and the low. So I do think there have been bounces, but the question is kind of separating what's being traded on bailout basis and what's a little more fundamental.
Mike, just want to draw your attention to the broader market here. We have steam a little bit. Dow's up 2%. We've got every sector now higher in the S&P. What are you seeing in the market internals 2 minutes into the close?
Actually, a little more mixed, Sarah, than the headline indexes would have you think. If you look at the up versus down volume, it's solidly higher, but we were better earlier in the day when we were trading at the day's high. So it's about a 3-to-2 ratio up to down volumes, but it's certainly incrementally positive after the losses yesterday. Take a look at the HYG, the high yield ETF, and see if you could spot the moment in the day where the president tweeted about a supply deal with Saudi Arabia and oil and see that spike. It just spiked exactly with crude oil. If you don't think the machines are programmed this way, you're not looking in the right place. And then it's kind of eroded a little bit since then. So it's an up day. It's certainly a net positive, but not really decisive either there on the credit front. And then just look at the volatility index. Again, you're getting a little bit of downside into the low 50s right now on an incremental basis.
We have 40 seconds left of the session, and as Sarah just mentioned, we're closer to the highs, very much so, than the lows. The Dow's up 460 points. The high of the session was 534, so just over 2% for the S&P and the Dow. The Nasdaq's up 1.6. Energy and oil certainly front and center. Oil prices up 21%, but still below $25 a barrel. Nonetheless, enough to give energy comfortably the best performing sector accolade. It's up 9.2%. All 11 sectors on the S&P, though, are high. Utilities, staples follow energy, but up about 2 or 3%. Worst sectors, consumer discretionary, up 0.3%, but still in the green. And there goes the bell at the close, Sarah. We are up 2.3% on the S&P 500, 470 points or so on the Dow.
Nice little rally there into the close. Welcome, everyone. If you are just joining us, I'm Sarah Eisen, along with Wilfred Frost and Mike Santoli, CNBC Senior Markets Commentator. Take a look at how we finished up the day on Wall Street. Up 2.23% on the Dow, 466 points. So we did have a little run up there into the close. We went negative a few times during the day and managed to resume some strength. S&P 500 up 2.25% as well. All sectors did manage to close higher there, led by energy. Had the biggest gain today. Energy stocks up 9%, though perspective, they're still down even with today's move, 50%. For the year. The NASDAQ popping 1.7%, and the Russell 2000 index of small caps lagging the other major averages, as it really has been throughout this market volatility, up 1.25%. Coming up, an exclusive interview with the CEO of Lululemon, Calvin McDonald, who will be here to discuss how the coronavirus is impacting his business and what they are doing in response, coming off of a very strong quarter with 20% same-store sales growth.
Joining us to talk about the market day, CNBC contributor Stephanie Link and Michael Zinn from UBS. Also, of course, Mike Santoli with us. Mike, nice little rally up into the close, but as you said, on the internals, not necessarily as encouraging. And credit today, and particularly in some subsectors of the debt markets, perhaps starting to flirt with some of those warning signs, but nowhere near the levels of a couple of weeks ago.
Yeah, I would say, well, it's mixed. Certainly a positive to kind of get back half of what was lost yesterday in the S&P. I think the real broader takeaway is that at least if you squint and look at this week's chart, it looks like things are maybe calming down. Maybe this is bumping along around a trading range. For on a week-to-date basis, the S&P is down just over 0.5%, even though it's ranged all over the place right there in the interim. And if you go back a week ago today, that was the high post-rally. We're down like 4% there. So it's pretty, I guess, a typical and expected type action after you get a severe crash and then a rapid bounce. And I think that the bullish takeaway is, look, the down days are not getting out of hand and they're not carrying into the next, at least for now. But this is all subject to change immediately.
Mike, I would also just point out, and you kind of alluded to this, yes, we're still getting those stomach-churning swings from highs and lows, but at a smaller scale, and 2 to 3% moves are not 9 to 12% moves, which is what we were seeing a few weeks ago.
Yes, and that's exactly the change in character. You don't necessarily know if that's the way it's going to persist. We obviously are not really trading the day-to-day fundamental headlines at all yet. It's much more about tactics and whether people see just an opportunity because the prices are down so much, and then looking at the credit effects of what the Fed's doing. So all that stuff in the mix, and I think you can kind of play it either way. But you're right that there has been less intensity to the moves, and a lot of that forced activity has gone by the wayside.
Michael Zinn, what did you make of the scale of the unemployment claims data this morning, and whether the stimulus packages we've seen so far are enough to offset it?
Yeah, I mean, I think it's a signal that we do want to make sure Congress hurries up and gets the next on just a pretty high number, and we don't even know to the extent which New York and Texas and California really printed it. So I think that we're going to have to brace ourselves for more stimulus. It's going to be necessary to make sure that all the states, particularly the ones that were later to shut down, we're going to hear probably bigger prints from them in the weeks to come because they shut down more recently. So we're going to need more support.
It feels like, Stephanie, investors we talk to, strategists we talk to, are sort of indecisive about how to look at these numbers. Are they just, this temporary induced a coma for the economy to make sure we can deal with and mitigate this horrible virus? Or is this going to be something more prolonged and more damaging to the American economy? I'm not sure we have a clear answer.
No, we don't have a clear answer. So these are the three things you want to keep an eye out for, right? You want to look at the virus numbers, and I expect those numbers are going to worsen because we're testing more and because we are getting more of a sense of urgency in terms of social distancing. Number two, you're going to want to look at the economic data, and the numbers are going to be horrible, absolutely horrible for quarters to come. But I would say, Sarah, that the S&P is down 24% year to date, and there are sectors that are down double that. So I think a lot of bad news is factored in. And third, I think one of the reasons why we aren't seeing these massive swings and volatility in the market like we had been seeing is because the bond market has stabilized. That's the actual bright spot in my mind, because we know how important the bond market is for the economic foundation. And with credit spreads thawing, high yield spreads are down 460 basis points from March. Commercial paper is down 78 basis points from its March high. Those are good things. Those are telling us that the Fed's actions last week are starting to provide liquidity, are starting to lead to a recovery in the bond market. And you need a recovery in the bond market. Eventually, you need to see a peak in virus data, and then you can see the market, the equity markets, actually rally from there. But all these things are interconnected at this point.
Guys, we've got some breaking news right now on Instacart. Frank Holland with the details. Frank.
Hey there, Sarah. Instacart just announcing it will distribute free of charge what they are calling health and safety kits to the more than 260,000 workers on the online grocery platform. All these workers will get a reusable and washable face mask made out of cotton and polyester, a personal hand sanitizer, as well as a forehead thermometer that the company says will give results within 15 seconds. These will all, again, be free of charge to the 250,000 full-service shoppers that are independent contractors that shop and deliver, as well as to the 12,000 in-store shoppers. These are part-time workers who work for Instacart in the busiest stores. The company says it worked with third-party manufacturers and health professionals to source these items without taking it away from first responders in the medical community. The kits will also be sold on Instacart to people who are customers. Back over to you.
Frank, is this an acknowledgement from them that they hadn't done enough so far, or is this just sort of part of their ongoing process to make sure they're doing taking the right steps as they go?
Well, if I spoke to the company, they said they were actually trying to get ahead of CDC guidance that may have mandated that they provide these kind of items to their workers. But of course, we've all seen the headlines where workers felt like they were not properly protected by this company and other companies in the delivery space.
Okay, Frank, thanks so much for that. Another wild day on Wall Street. Of course, a positive day, though, ending close to the session highs. Bob Pisani's got more on all the big movers for us. Hey, Bob.
Good close. We're only down fractionally for the week, Wolf. Let me just show you the S&P 500 because we are calmer this week. The volume in the big ETFs are lower than last week. The volatility index is the lowest since March 10th right now. S&P intraday swings 3 or 4%. That's a lot, but a couple weeks ago, 5, 6, 7%. Calmer markets. Take a look at energy stocks. They were the big stars on hopes for a bottom in oil and production cuts. It's amazing to me that they buy these stocks anymore, given how heartbreaking they've been. Conoco was a $60 stock a month and a half ago, and now it's 33, and yet people are hopeful that $20 bottom in oil has been hit. I find it amazing people still do that. Walgreens, good earnings report, but came out and said they're not in a position to accurately forecast their earnings. It didn't quite withdraw the earnings, but they're not in the right position. And we saw other companies like Rite Aid down as well on that news. Some of the restaurants, Brinker suspended its guidance as well. That's Maggiano's, and some of the other ones like Potbelly and Red Robin. They were all weak on the day. My stock of the day, Luckin Coffee. I kept reading this report. I could not believe it. The COO accused of fabricating much of the company's reported sales in 2019. Fabricating, not just a little exaggerating, fabricating. That's an amazing story. A lot of talk about Chinese IPOs today. Back to you.
Down 75%. Enormous move there. Bob, thank you. Now, volatile day for the energy market, as Bob was saying, with oil prices surging this morning after President Trump told CNBC he expected Russia and Saudi Arabia to announce a 10 million barrel a day production cut. The energy sector was up by far the most of the sectors, up 9% or so to the S&P, broader S&P's 2.3%. Mike, I guess we saw today the ability for something to bounce aggressively when it's already fallen so much. I mean, simple maths, of course, but still below $25 a barrel. Even with that level of jump, it doesn't remove the questions that hang over the sector as to whether they can continue to survive at these levels.
No, not at all. In fact, that jump today only got us back about 2 weeks in time. So that's just how extreme the most recent phase of this decline has been. And it does show you, though, too, that it was somehow primed to respond this way to any hint of changing dynamics, even if it doesn't change things dramatically, because, that original assertion by the president doesn't seem like it got confirmed by other players out there today, and that it didn't really matter in the end. There was a little bit of coming off the boil of crude prices, but still ending up 23% on the day is pretty significant. But $25 oil doesn't do that much to change the economics for a lot of the players in this industry.
Michael, what are the economics of the oil patch at this point? What kind of damage are you expecting? Bankruptcies, and how is that weighing on the overall economic picture on top of what we're already dealing with this virus?
I mean, it's been a heavily shorted sector for a long time because obviously it's been a basket case.
We lost your shot, Michael Zinn. Sorry, we'll work on bringing it up. You've got a patchy connection. We do have some breaking news in the meantime on Tesla. Phil LeBeau with that for us. Phil.
Sarah, Tesla out with the announcement on deliveries for the first quarter, and they're better than expected. The estimate was for deliveries of just over 79,000 vehicles. Tesla saying that in the first quarter, it delivered 88,400 vehicles. The breakdown coming out like this, you've got 76,200 of those being the Model 3 and some Model Y in there, though we don't know the exact breakout there. And then 12,200 of the Model S and X. So as you take a look at shares of Tesla, guys, the reason it's moving higher is that it delivered better than expected in terms of the first quarter, 88,400 vehicles versus an estimate of just over 79,000. Guys, back to you.
It's interesting, Phil, that it's having such a big move here, given the fact that, it's old data. What's actually happening right now, right, with factories closed? And what are they making ventilators at those Tesla factories?
Not to my knowledge, they are not making ventilators. Now, there was a report yesterday that they had some ventilators that they bought in China that they then had shipped to hospitals in New York. So they have contributed to the cause, but to my knowledge, they are not actually manufacturing them. And in terms of, Sarah, this is a number from the first quarter, and so many people are focused on what happens in the second quarter. What we don't know for sure is just what's going to happen with production in China as China comes out of coronavirus. Clearly, California being a hot spot, so to speak, in terms of what's happening with coronavirus. It's unclear how long the Fremont plant will be down. So this is really going to be the focus here. What can people expect in terms of deliveries for the second quarter? We have not gotten an estimate in that regard from the company. If we do, we'll let you know.
But Phil, just to clarify, this is first quarter calendar year?
Correct.
So it's not really old data. I mean, it's old by
but to Sarah's point, Wilf, to Sarah's point, the question is right now, if you're an investor, are you focused on whether or not a company made their estimates, not just Tesla, but other automakers, other manufacturers, or are you looking at the landscape and saying what's going to happen in April and May when we have so much of the country that may be shut down? So I think that's more to what Sarah was talking about there.
Of course, but I think that there would be a positive to take. If this all fell in January and March, then the huge positive is that take the virus away, and they were absolutely killing it. And if it continued to even out over April, then the takeaway is, the virus hasn't hit them as hard as...
Sure, and another...
this is a big beat based on...
And you'll also see the bulls on Tesla be excited at the prospect that as China comes out of the coronavirus, as they ramp up production in the Shanghai Gigafactory, that theoretically you should see their deliveries ramp up commensurately in China. Now, whether or not that happens remains to be seen. But remember, when you look at Tesla and their deliveries, guys, it's global. This is not like when we talk with the automaker sales over the last couple of days and we say, well, here's their sales in the U.S. Tesla deliveries are worldwide.
Got it. Phil, thank you. Now climbing 13.3% after hours on those delivery numbers. Phil LeBeau, and thanks to Stephanie Link and Michael Zinn for the conversation. Up next, Lululemon just announcing a number of new measures to deal with coronavirus-related closures. We're going to speak exclusively with the CEO, Calvin McDonald, in just a few minutes about those new steps, what he's doing in the face of this pandemic. That interview in 90 seconds.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
A lot of people are aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM
FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Estimate revenue, though, coming in at $1.35 billion, and that is in line with the street's expectations. The company, this is interesting, is not surprising, at least, not providing guidance given uncertainty surrounding the coronavirus outbreak. However, they did have an update, Chewy, saying that they are extending sick pay, PTO, and health benefits. They're also increasing cleaning throughout the work sites. Now, shares are off about 1.5% in extended trade, but guys, they are up about 20% this year so far. They've been resilient to the broader sell-off. Of course, pet goods, pretty recession-proof. Also, delivery in the age of coronavirus. Chewy has been well-placed, so it has been more resilient than many other stocks. Back to you.
Thanks so much for that. And coming up, we'll discuss those results in an exclusive interview with the CEO of Chewy.
But first, one sector feeling the impact of the coronavirus is retail, as shutdowns across the nation bring store traffic to a near halt and furloughs surge. But one company just announcing its employees will still be paid through June, even though it has closed all its North American and European stores. Senior management will also take a 20% pay cut, and the company is pausing its share repurchase program. We're talking about Lululemon and some new announcements just laid out. Joining us for an exclusive interview is Lululemon CEO Calvin McDonald. Welcome, Calvin. Good to have you here, and thanks for sharing this news with us. Give us some of the headlines, as it appears you guys are reassessing what you're doing here and the decisions you're making and the steps you're taking to deal with this pandemic.
No, absolutely. Since first, let me acknowledge that obviously these are, challenging times, and we're so respectful and appreciative of all the work that everybody in the communities are doing to support all of us through that, be it first responders, those in the health medical field, and the teams across Lululemon around the globe. We've used three guiding principles since we first started having to deal with the store closings to guide us through. And the first is we wanted to make sure that we always continue to support our people. Second was to strike the right balance between both short-term and long-term decisions. And the third is we're in a position where we can and will continue to invest in our future. And on supporting our people and our teams, the announcement, the decision today to extend pay for every employee, part-time and full-time, around the globe through to June 1st, regardless if we remain closed or we're able to open when it's safe to do so, is really living into that principle and ensuring that they can have peace of mind and certainty in these uncertain times. And it was the right thing that we felt we could do and wanted to do.
Yeah, no question. It's good to see companies like yours doing this. I think also part of the announcement is that you're going to temporarily pause the share buyback program. I mean, so many retailers have sort of tapped into credit lines. I don't think you guys have any debt, but just bring us up to speed on how you're thinking about cash and capital allocation in light of all of these store closures.
We ended the year with over $1 billion in cash, $1.1 billion in cash. We have a $400 million revolver that has not been drawn, with no plans to draw on it, and no debt. So financially, from a balance sheet perspective, we are in very good standing, in a position, as I said, to support our teams through this, think long term, and continue to invest and innovate and look for growth opportunities. That's not to say we're not making the right decisions in the short term, and rebalance our priorities, rebalance our expense management. But it does allow us to not just obsess on the short term, but to think about when we recover, when we come out, when we open the stores, how do we do that and emerge even stronger? And that's the balance we're doing, and how we're thinking about supporting the teams.
I am wearing sweatpants and leggings all day. I have to imagine so many other people working from home are. What are you seeing in terms of online sales trends right now with all the stores in U.S. and Europe closed?
Our online business, which was incredibly healthy for us all of last year, we announced, had an earnings call a week ago and shared very strong numbers in 2019. Quarter four was our strongest quarter of the year. Very strong comps in our stores and our digital business, which was up 41% year over year. And we've seen that momentum continue into this year, and with the store closings accelerate. And we have seen a shift. All businesses categories are doing well, but there's definitely a shift to comfortable clothing, and as well as at-home accessories, from our yoga mats to our blocks, to a variety of those items that are helping support people find new ways to sweat.
You sort of went through this experience already in China, and actually, like Nike on your last earnings call, said that you learned a lot. You sort of had a playbook. What is the status of the stores in China? Are they all open? Has business come back? And what have you learned from that you can apply now to the U.S. and Europe?
All our stores now in China are open. We opened our last one in Wuhan just this week. I think we've learned a variety of things. One, how the guest will respond. Now in China, the stores were closed for 2 weeks, majority of them. We've had a few that stayed closed for a longer period of time, but in general, it was a 2-week close down, and then the stores opened. And then what we saw each day, each week, they progressively gained momentum and got stronger. We're still not yet at the point where we were prior to the closing, but we know each week the business gets stronger, and the guests sort of resume some degree of normalcy through the week and on weekends. We've been able to apply that, plus how the teams worked, which is equally important because, you shut down, the stores, and we shut down our SSC, our store support center, where all our head office employees work. Work still needs to get done, and how teams interact and how we continue to innovate and plan forward to the business. We equally are able to pull some of those quick initiatives as some of the innovative ideas they had around digital sweat. So we've been able to pull not just how we think our business will rebound, but how we work as a team, how we continue to drive the business forward and make investments in our future, and some of the innovative ideas and what responded best with the guest.
Calvin, it's good to hear that the online sales are holding up relatively well, certainly compared to having to shut all of your stores. Does that give you hope that the consumer here in the US, or certainly your type of consumer at least, is kind of ready to bounce back quite quickly in more of a V shape as and when the economy opens up a bit and the restrictions relax?
I think there will be a couple of differences when I look at the China business to our North American business. As I mentioned, China was closed for 2 weeks, and then a slow, opening and getting back to a degree of momentum. In the U.S. and in Canada, we're going to be closed for a much longer period of time. That will create a much more pent-up demand for our product. And equally, I think when we do open, the guest will get back to their normal behaviors quicker. So I do anticipate a quicker return in North America. That's not to say immediately we will get back to the momentum we had coming into the pre-closing, but I do anticipate our business to rebound quicker. And equally, I think that the importance of our category, sweat, and the role that we play in that is going to be as important once we reopen as it was before. And we're going to see the guests continue to want to live the sweat life, continue to want to wear a product that is solving their sweaty needs. And we think we're well positioned that when we do reopen our stores, that we will see a healthy a momentum shift in our business. And that's why we're continuing to invest in that future and that vision. that we have.
I guess there are always sweaty needs, to borrow what you said, Calvin. but across retail, there's so much pain right now. The department stores with their furloughs and gaps and so many other retailers. I'm wondering how you think brick and mortar is going to look when this is all said and done. I mean, you think there's momentum back in your business, and you've obviously got a strong brand and a lot of momentum, but the industry in general, how does that look?
I think the length of the closing is going to be a big determining factor of how retail will look coming out. We're fortunate that we are able to weather the storm and the length of closings. We're fortunate that we're able to invest in our teams and we're able to continue to pay our employees. We've spent years developing, our most important asset, which is our educators and the talent around the globe, and our ability to continue to pay. And in fact, we're continuing to develop them and lean in on online development courses for our employees around the globe during this period of shutdown. So our ability to do that and equally continue to invest in the future is why we're well positioned. But for other retailers, weathering that storm is going to drain resources that might have been limited already and prevent their ability to, one, bring back some of that talent, to invest in the things that they need to compete in the new reality of retail, which is how you invest in digital and connect it to your physical space. What we're seeing with guests is their behaviors are changing. I think that's good. More are going online, and an omni guest is the best guest for any retailer. And once we open, those are going to be behaviors that are ingrained and will stay. It's which retailers will have the investment to be able to create the initiatives to fully support and take advantage of those behavioral changes. I think will be what separates those that are able to weather the storm and those that are. It's going to drain a lot of the resources and make the recovery more challenging for them.
Finally, Calvin, are you receiving any concessions or breaks from landlords, especially in malls that are closed?
We view a number of our partnerships across our community. Our ambassadors are a big part of our community, and we've launched a $2 million relief fund to support independent studio owners around the globe with a $2 million fund that we're working through now and quickly providing grants to help support them. Equally, our landlords are partners of ours, and we paid our April rent. And we're in discussions with them as these closings extend and find the right balance for both of us. But we view them as a very important partner in our success, in the success of our stores and our future. And we're in discussions with them to find the right balance of the current situation for both of us.
Calvin McDonald, thank you so much for joining us to talk through some of these issues and your new announcements, especially that commitment to pay your employees through June 1st. The CEO of Lululemon.
Indeed, our thanks to Calvin. Up next, former IMF chief economist Ken Rogoff will join us to discuss whether he thinks the coronavirus impact on the economy could rival anything we've seen over the last century and a half. And as a reminder, you can always watch or listen to us live on the go on the CNBC app. We'll be
behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
It's Tune In Sports on this day, April 2nd, 2019. OKC guard Russell Westbrook becomes the second player in NBA history to have 20 points, 20 rebounds, and 20 assists in a game.
There it is, 20 rebounds. There it is, 20, 20 game. First time since 1968. And Wilt Chamberlain.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
This is the kind of card that has America talking. With it, people with Medicare are getting all-in-one coverage for their doctor visits, hospital care, prescription drugs, and more. This kind of insurance, called Medicare Part C, may also cover dental care, eyeglasses, hearing aids, fitness programs, vitamins, even healthy meals and rides to the doctor. With this kind of coverage, you do not need a Medicare supplement insurance plan. You will access your benefits through your Medicare Part C plan for one low and oftentimes $0 monthly plan premium. You deserve to get the most from your Medicare benefits. Call now for free information that may help you get more coverage for less money. There is no obligation to enroll. Whether for yourself or someone you love, call the number on the screen now. Call now.
Get the latest coverage.
And an update now on the outbreak in America.
On the CNBC app.
All coming to you live from separate locations.
Market coverage. Breaking news.
The pandemic controls the action.
Stay connected. Stay informed with the CNBC app.
Welcome back. Our next guest, addressing the severity of the coronavirus pandemic in an op-ed in the Wall Street Journal, said the coronavirus debt threat developing nations as well as advanced ones will soon face a health emergency and its economic consequences. Ken Roger, former IMF chief economist, joins us now. A very good afternoon to you, Professor Roger. Thanks for joining us. Firstly, I've seen you've been quoted as saying that you give the U.S. response to a virus a 3 out of 10. Tell us why that is.
Well, for starters, we didn't have testing when it came out. We made technical mistakes. WHO rated us, I think, as the top large country in preparedness for a public health crisis, but we weren't. Second, we took a long time to respond at every level. And now we have a partial lockdown where some states are having people sheltered in place and others aren't. I don't even know what that means. I don't really see how you're getting out of it without a consistent national response.
What about, though, on the economic side? What rating out of 10 do you give the bailout bill, the CARES Act, sorry, I should call it, what Treasury's been doing and what the Fed and others have been doing?
That's a different matter. The public health response is the 3. And that's the most important thing here, of course. But the macroeconomic response has been very strong. What the Federal Reserve has done, thank goodness, we still have an independent Federal Reserve, which some people don't want. And the $2 trillion stimulus, it's not going to be the last, but absolutely excellent. So our macroeconomic response is excellent, but it's a little bit like you're in a war. And you're not doing a very good job fighting the war, but you're doing a good job maintaining the economy. You really need to do better on the war.
This time is different, Ken. I mean, the title of your book, a phrase that, always haunts investors. It's never different. I know you looked at the, 8 centuries of financial folly and all the crises and the depression and the economies, but is this time truly different in terms of what we're looking at here when it comes to our economy and our markets?
There have been financial crises that get set in place by some sort of catastrophe, but the global nature of this is really hard to find outside of a war. You might say, at best, this is a combination of the 1970s oil shock, because there's a supply shock, and the 2008 financial crisis, the depth of the demand shock. But really, I think you have to go back at least to the Great Depression and maybe past to see a dive globally of this speed and depth going on all over the world. We didn't really have numbers before the 1930s. It's hard to know. but it's certainly something extraordinary. It's still in play. They're trying to contain the aftermath, the financial crisis, but emerging markets, I think, are certainly going to get cut to their knees already, and it's just hard to know until we know when we're getting out of it how bad it's going to be in the advanced countries.
You've been critical of sort of ever expanding government deficits and debt piles in the past. Do you think that expanding those at this time is the wrong approach, or do you accept that it kind of doesn't really matter how much it costs in the long term, that you've got to spend the money in the short term when you face a crisis like this?
Oh, I think we're absolutely doing the right thing. The whole point of trying to maintain a sound credit rating and not just, letting your budget debt go in, inexorably high forever. We certainly have a fiscal space, is to be able to respond very assertively in situations like this. We're well placed. Germany is well placed. I think the UK is well placed. Italy is not well placed. Many emerging markets are not. So, no, this is a war, and you really can't look at the other side. You have to get to it. Obviously, you want to spend the money sensibly, but I think by and large we are. No, there are many ways to get out of high debts. One of, many, many ways to get out of high debts. So we'll deal with that when we get there.
Thanks so much for joining us, Professor Rogoff. Great to catch up as always.
Still ahead on the show, Chewy shares under pressure after reporting earnings just moments ago. The CEO of the online pet products retailer will join us exclusively, coming right up.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Also get this companion DVD for free.
Call 800-850-3232 or go to followthesmartmoney.com now. That's 800-850-3232 or followthesmartmoney.com. That's followthesmartmoney.com.
Restaurants are our family, the cornerstone of our communities. And our family needs help. Right now, they're facing a crisis, and they're counting on your takeout and delivery orders to help them through. Because if we don't treat restaurants like family today, they might not be around to treat us like family tomorrow. Grubhub. Together, we can help save the restaurants we love.
An up day for Wall Street today, the first in 3 sessions. Let's go back to Mike Santoli with his charts. Mike.
Yeah, Sarah, taking a longer-term look at kind of where we came from in terms of the bull market that, who knows, maybe it ended back in February on a longer-term basis, maybe not. This is a chart of the 10-year rolling return for the S&P 500. It's from Fidelity, and what you'll see is, striking to me anyway, we peaked out, the 10-year trailing return at the high of the market was about 16.5%. If you look at prior very long bull markets, they've almost always, in the 90s, in the 80s, in the 50s, in the 20s, gotten up to about a 20% annualized 10-year total return. So we fell short of that. Doesn't necessarily tell you that much about where it's headed from here, but this line will trend lower even if the market stays flat, because we are going to be kind of anniversarying higher prices if you look back 10 years from 2010, 2011, et cetera. It does suggest that maybe the market was not so crazily inflated at the highs, and we do have these periods when we get a little bit of an interruption and then a reversal higher. But it's just a little bit of something that also tells you that you're still looking at basically about a 12.5 or 13%, I think, trailing return at this point, even after the current decline.
Wow. And Mike, I guess that suggests the sell-off was so bad in 08-09 that the 10-year rolling return got to negative territory, negative 5%.
Absolutely, yes. You were negative by that point on... I mean, I think on an even like a 12-year basis, you were still in the red at the very lows in 09.
And we've got a very long way to go from where we are to get to that level of pullback as well this time round. Mike, as always, thanks so much for that. Still ahead, online pet products company Chewy hiring workers amid a sales spike during the coronavirus outbreak. Coming up, we'll be joined exclusively by Chewy's CEO.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right? Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
It's TuneIn Sports on this day, April 2nd, 2019. OKC guard Russell Westbrook becomes the second player in NBA history to have 20 points, 20 rebounds, and 20 assists in a game.
I heard it, 20 rebounds. There it is. 20, 20, 20 dead. First time since 1960.
Tonight,
here is where we stand this evening.
A complete update, progress reports, medical insight, the latest on bailouts and small business survival, markets in turmoil. Tonight, 7 Eastern. Watch and listen live on the CNBC app.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
It's TuneIn Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now, it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
Well, there's no question the spotlight today will focus on Dominique. Given what happened last week, I would think there's some incentive for Dominique to go.
To listen to conversations breaking down the moments just like this, click on Sports to be part of the discussion on TuneIn.
Welcome back. Let's get the latest now on the coronavirus. Seema Modi with an update for us back at headquarters. Seema.
Sarah, good afternoon. There are now more than 1 million confirmed cases of the coronavirus around the world, according to the latest count from Johns Hopkins. The U.S. has nearly a quarter of them. Cases have doubled in the last 8 days. The death toll is now above 51,000. President Trump invoking the Defense Production Act to help six ventilator manufacturers get the materials they need. The companies are General Electric, Hill-Rom Holdings, Medtronic, ResMed, Royal Philips, and Vire Medical. And it may take up to 20 weeks to get stimulus checks out to all Americans who are eligible. This according to Trump administration estimates given to House Democrats. The first direct payments are expected to go out the week after next, but paper checks won't start being sent until May 4th. And Amazon founder Jeff Bezos is giving $100 million to help people going hungry because of the pandemic. The money is going to Feeding America, a nonprofit focused on food security. As always, for more coronavirus coverage, head to CNBC.com. Wilf?
Seema, thanks so much for that. Coming up next here on Closing Bell, cities seeking an uptick in pet adoptions. They've been happening since coronavirus, and we're going to discuss that and very much more with the CEO of Chewy on the other side.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
A lot of people aren't aware that lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
It's TuneIn Sports on this day, March 27th, 1988. The Chicago Bulls and Atlanta Hawks match up in the Georgia Dome in Atlanta. Now, it draws a crowd of 62,046, the largest in any game in the NBA history. And the Bulls win 89-74.
But there's no question the spotlight today will focus on Dominique.
Carrying this nation, and so we're here in over 1,800 communities with the feed and supplies you absolutely need. Always.
Restaurants are facing a crisis, and they're counting on your takeout and delivery orders to make it through. Grubhub. Together, we can help save the restaurants we love. Restaurants are facing a crisis, and they're counting on your takeout and delivery orders to make it through. Grubhub. Together, we can help save the restaurants we love.
Welcome back. Pet food e-commerce company Chewy just out with fourth quarter earnings, largely in line, saying it won't, though, issue full-year guidance due to the outbreak and the unpredictability it brings. Joining us is CEO Sumit Singh. A very good afternoon to you, Sumit. Thanks so much for joining us. I mean, I think we're going to definitely get to some of the very commendable measures you've enacted to help animal shelters and things like that. But I wanted to ask, first of all, if I may, just how sales have held up. Clearly, being an online retailer, perhaps held up better than has done for most.
Yeah, so we're nice to talk to you again. We're as we've always anticipated that our business remains resilient during this time of economic disruption. And we're proud to be serving millions of pet parents who are relying on us now even more so than ever. So sales have held up well. We're seeing elevated levels of demand, and both from active customers as well as new customers.